right. What's up, everybody? Good morning, good morning, good morning. About to set up some stuff real quick. Interesting. Yeah, definitely let me know if you can hear me okay and see the screen properly. Just before we get into the open and start doing things. Tested everything and it sounds okay. But yeah, if y'all could just let me know in the chat real quick, that would be great. If you can hear me properly. Yeah, all right, cool. Thank you, Eddie. Yeah, I don't know why it says something's got an issue, but whatever. All right, so we got CPI tomorrow. All right, we have at 7 a.m. a news event. So similar to yesterday, how there was no news, there's no news until the silver bullet time window. So the 6:30 time is what we're going to wait for in terms of entry. That's just the way it goes. Pre-market, as always, just for completeness sake, if you trade any entries before 6:30, you're trading inside the manipulation for the most part, for the daily range. Okay, so if you choose to take entries before the 6:30 open, you're going to have to realize that and make a framework based on what price should do overall. And sometimes you'll have to trade against the narrative overall. So then you can take advantage of the manipulation, pushing us into an area where we should then see the trend continue, or whatever your assumption is. Trading before the open is generally viewed as the manipulation portion of things. All right. So again, we have CPI tomorrow, and then we have core PPI on Thursday. Today we have something that has to do with jobs. So we'll see if there's any type of useful stuff that takes place. So yeah, as it's been the whole week, this week and last week, because of the news environment, because of what has been going on in terms of volatility, in terms of just the overall market, we're going to be continuing to hold on to half risk. We're going to continue to be very cautious and patient. We're not fearful because we have rules. But yesterday I was live with my private community, and price left without us. And that's totally okay. We pointed out one short idea. I didn't participate, but one of my students did. Niall, right? He'll be joining soon as well. But yeah, sometimes that's just the way it is. And you want to accept that. You don't want to be playing games with your trading. This isn't a game. This is a business. So, you got to look at it as such, right? So given the current environment, we're going to continue to be cautious. The buy side delivery for the T-notes or T-bonds has been continuing, at least for now. If this low was to be violated and this fair value gap is violated as well, that turns off my interest for this market continuing to go higher, at least for a short period of time. We want to see what's going to be taking place in terms of whether this is going to get into correlation with the markets that are associated with it. for the most part right now, it's not really giving us that. We see the bonds still going higher while the indices are tanking, right? Yo, what's up, JD Consult? Welcome from Nigeria. It never fails to amaze me the access that me going live has. Like, I have access to people in so many different countries. I appreciate you chiming in from all the way out there. I'm in the United States. But yeah, that's amazing, brother. Welcome. So yeah, we have the failure swing down here, as we've been talking about. Price has swept out the low here. Once it swept the low, it got back above that higher time frame low fairly quickly. So generally that is something we don't like to see if it's going to continue and be aggressive, at least in the moment. Doesn't mean it won't continue and then eventually take that out. But when price is trending in a particular direction and takes a liquidity pool, like this one, for example, you automatically want to jump into the assumption that, price should retrace. It could retrace. And depending on how fast it retraces off of that, it'll kind of dictate in many cases how strong the retracement will be. If it just continues to stay below it, then obviously that gives you the insights to continue to press in that direction near term. But again, a lot of times, pretty much every time price takes a higher time frame level or hits a higher time frame PD array, you want to study what that does once it takes that, because that can give you insights for the current environment, just near term, how you should behave and anticipate what price is going to do. But yeah, so we have this failure swing here too, right? 2 failure swings. We do have the S&P, so we want to continue to monitor that. Again, as always, we start from the economic calendar. We just talked about that. Then we go to the bonds and yields to get a feel for what that's doing, because this is generally the bloodline of the DXY, foreign currencies, as well as the indices. All right, so if the bonds continue to fall, we're going to obviously continue to see trustworthy delivery to the downside. Yesterday and on Sunday, I was talking about this daily fair value gap. In the live call with my private community, we said that it was potentially going to have the ability to attack the midpoint here on this daily fair value gap, and ended up doing just that. Okay, and pretty much closed after it filled in all the daily fair value gap, which is this one right here. And now we're trading back inside of it. I said also when the week started, I wanted to see how price was going to behave with this fair value gap, if it was going to stay below it. We were observing this wick here too, the midpoint. Notice how price didn't even attempt to get up there. This whole entire drop is based on a lot of things that have been taking place in the U.S. economy. Our economy has been propped up through government spending, and now because that has stopped, plus there's tariffs, that explains why this is having the response that it's having. And that just, it's just back-end knowledge for us to trust that we are in a bearish environment right now. Any type of buys are going to be counter trend until something dramatically changes. And unless something changes, we don't stray away from our higher time frame objectives, right? Or higher time frame narrative. Bias and narrative, for those of you that have been here for a while, are 2 separate things when it comes to how I view the market. Narrative is what it's overall doing on this higher time frame, the overall sentiment. Bias can change from trending in that same direction to consolidation, or it can retrace. All of that is seen under the view of the higher time frame narrative. This way of categorizing bias and narrative assists you in, or it pretty much allows you the opportunity to hold on to a narrative and not be a flip-flopper and damage your account because you can't just, be solidified in one direction. Just because price retraces doesn't mean that's the direction it's going to end up going overall. A lot of times the retracements in a downtrend or vice versa in a bullish trend is just to set up what that higher time frame narrative is doing. And in this case, to pull price into a premium array to possibly continue to drop because we're in a bearish market. And if we're bullish, right, it's just pulling down to a discount array to then try to continue to set up buy side positions. Okay, so I'm going to keep repeating that, for probably throughout the whole year, just because I've seen not only in my own trading, but with the students and that I've been teaching and their responsiveness to this topic, I've seen that it's been extremely helpful for them to allow themselves to hold on to a higher time frame direction. And when you have this mindset and look at things this way, it puts you at ease. So then if price retraces against a downside move that you were expecting, you don't automatically switch to the default negative vibe thinking that, I don't know how to trade, or I'll never get this, or I'm horrible at identifying bias and narrative. It allows you to have that skill set and hold on to things, so then you can have the ability to see how holding on to a higher time frame narrative is extremely helpful. So then when it does kick back in line with that higher time frame narrative, you're able to then get in and trust it, but then you're also able to gauge what your risk should be, your risk model. Aside from the limits that we put on our trades, 1 to 2 trades a day, if you take a loss at the initial risk amount, you drop it by half on the next trade, and then you continue to keep it at that lower rate in terms of risk exposure until you make back whatever it is you lost. It's easier on your equity curve, it's easier on your trading psychology, and just one of those helpful things. Oh, what's up, Neo? I forgot that you're that's your YouTube handle. I forgot. Welcome, my brother. Welcome. Niall is the one that caught a short yesterday in the live call we had in my private community. So that was an amazing short. Caught the minimums and got out, right? So yeah. If at any moment you guys have any questions, obviously, just let me know. These calls on Tuesdays are generally different than the Sunday calls because obviously we're looking for opportunity. We're on the prowl for, victims. Okay. So yeah. So going into today, right, again, we're going to want to see what the bonds and yields are going to do. So far, there's SMT at the highs here, but there was also SMT, I believe, let me see. Yeah, so far there's SMT at the highs. There's not really SMT at the lows in any capacity, really. So we're just going to continue to hold on to the fact that this is going to continue going higher unless this low is to be violated. If this low is violated, that's multiple PD arrays. That's a break in market structure. Unless it just wicks down below it. If it does this type of movement below this low, that's breaking market structure, disrupting this buy side delivery. But again, when price took the buy side here, it retraced, right? So when the higher time frame levels are met, expect some form of a retracement. Your eye should go down into internal range liquidity. That's order blocks, fair value gaps. In this case, because we're bullish, some type of internal low. External range liquidity then becomes the high, right? So, and then of course you look at the other side, right? When external range liquidity in the downtrend's taken, that being the lows, internal range liquidity should be the thing we look to identify, okay? So once it sweeps a low like this or hits a higher time frame PD array in some capacity, we then adjust our view to spotting some type of premium array, right? Internal range liquidity, right? So then when price does look to deliver away from that, our eye goes back to external range liquidity. Lows in a downtrend are external range liquidity. Highs in an uptrend are external range liquidity. And then obviously when price retraces, any type of retracement is then attacking internal range liquidity. We go from internal range liquidity to external range liquidity. We go from inefficiencies or order blocks to highs in a buy side delivery, right? And then any PD array that's above. And then same thing for the downside delivery as well. just flip it around, right? So yeah, right. So we took out a external range liquidity, went to inefficiency. Now, if it's going to continue going lower, we're now going to go to from inefficiency or internal range liquidity, and the target should end up being the lows here. If this high is violated with a fast move, an impulsive, displacement, that's a break in market structure. And if you think of our validation principles, 3 PD arrays above is what we don't want to see violated if it's going to continue to sell off, and we're going to continue to trust this being in a downtrend. And then vice versa for this, we don't want to see this low violated. If that's violated, we have 3 PD arrays to the downside that should have supported price going higher. If it violates the low there, there's a low fair value gap. We got a weekly inversion fair value gap if that low is taken. So that'll end up being 3 PD arrays. So simple as that to identify overall adjustments in terms of narrative. And of course, this again would upset the run higher, because it should go from running higher in this case back down off of external range liquidity to internal range liquidity, or come off the highs, in a different way to say it, come off the highs, go to an inefficiency, then from inefficiency run back up to the highs. If that doesn't happen and we just go off the highs and then back down below like a swing low here with a displacement, that's upsetting the overall order of things. All right, so that's a break in market structure. And then obviously we would adjust and start to frame our opinions with that in mind. So right from the start of the week, I assumed that price would retrace in some capacity. I wanted to see it maybe get back down into this, because it did not even attempt in any strong capacity to get down there and hit this daily fair value gap and responded higher. We now have a pretty strong inclination that price is going to use this order block as a bullish order block, right? We have S&T at the fair value gap I was talking about. We're staying above this fair value gap. So it's only right for us to aim for things that are above us, because that's what price is providing to us. Okay, there's no reason why we would think that, this is going to short. We are in a pretty extreme premium. So if it was to violate this low, our target could then be some of these levels in here. These are previous day's lows, right? So if you remember the list I give out and talk about in great detail in my private community, but I do mention it here and there here on the YouTube channel. Previous day's highs and lows are part of the list of everyday liquidity pools. They're always there. Previous week's highs and lows, previous month's highs and lows, so on and so forth. They're always there. So if you have a decision for price to go in one direction or another, you want to always consider those, because those are the most near-term liquidity pools, or some of them, at least from this higher time frame. Because price has created that SMT, we now created a institutional order flow entry drill, meaning that price did not even attempt to get down into the midpoint of this. That's a strong signature providing evidence that we're still going to be bullish in the currencies here. Right? And if that's the case, what's the most near-term buy-side liquidity? Well, think about highs, right? Because we went from inefficiency back up to the highs, so internal range to external range. Now, since we're outside of that range, when price continues to deliver here, if we can get inside this order block, I'm assuming that that's going to continue to set up buy-side delivery until proven otherwise. Okay? So that is going to be our continuous assumption, and that's what we're going to favor for the currencies, for my currency traders. And of course, we take this information, since I'm an indices trader, we're going to end up using this as a tool to assist us in validating or trusting what the indices are going to do. Okay, so this is my assumption on the currencies until something's proven otherwise, and some of the evidence as far as why this is a justifiable run higher. Now we move over here to the DXY. Okay, so we see the DXY is definitely favoring us continuing to drop and attack sell side liquidity. If we go to maybe the monthly chart, we can maybe see something. Yeah, so yesterday on the live call as well, I pointed out this monthly fair value gap. So it looks like we're going to continue to favor attacking that. When we started the week, I did make the assumption that maybe we'll have the opportunity to catch a manipulation using the power 3 perspective to maybe see a early run higher using Monday as the manipulation of this weekly delivery. We could see that it failed to do so. That is a strong indication that we are extremely weak and, or extremely interested in attacking sell side. There's no buying and selling pressure. There's no strength or weakness. There is interest in price delivering to particular levels. All right, because that's just the way it is. There's, debates about that, but I'm not going to debate it with anybody because that's just the way it is. But because it left this wide open and we haven't really seen much of a retracement to allow for power 3 to be observed in a reliable capacity, it's been very, very, very soft in terms of retracement, and we've just been extremely aggressive to the downside. So I want to see how deep we're going to run into this monthly fair value gap. Okay, if we go back to the monthly time frame, we observe this fair value gap. We break it down into quadrants. We now have another layer of targets that we can look to identify as we look to participate in something that shows up. Okay, so we have the quarter point, we have the midpoint, 75, and then the full fill of the overall fair value gap. I do want to see what the response is going to be today, and then of course off CPI. CPI may trigger in something that responds up to then attack some type of buy side liquidity, right? It may end up doing that because it's been so aggressive to the downside, but we'll see. Obviously, for the current moment, we're obviously seeing price favor sell side delivery. This is amazing. Waiting really makes a difference. Oh yeah, 100%. And you notice how, I hope that, those of you that spend a lot of time with me, I hope you start to really see the statement that ICT has mentioned before when he gets the question as far as where he spends the most time in his analysis. It's on that higher time frame. So I hope that seeing someone else, like some other trader aside from ICT, showcase the importance of that statement, I hope it highlights it for you as well. So then, if you spend more time on the lower time frames, but you've been struggling, maybe you can make that adjustment yourself and then start to see some progress alongside, the analysis stuff that we do and, the different tactics I showcase here in my private community. But yeah, so again, I wanted, to see a retracement get up into here, then start to deliver this kind of stuff. But obviously that did not really, get provided to us. Yo, what is up, Nico? Another one of my private community students. Freaking savage. Where you been, bro? You gotta DM me, keep me updated. What's been going on? I'm glad to see you here. It has been a while. Oh, again, just as a reminder, if you guys get value from the content, definitely like the video, share with your friends. Let anybody know that you think can benefit from what we do here. Let them know to come and hang out with us. I like word of mouth. I don't really want to do any paid marketing, right? If it's word of mouth and all my supporters and students tell their friends, I can already assume right off the bat because their friends, the community will be a lot more tight knit. It's kind of how my private community is too, and I'd like to have that same vibe here on YouTube. But yeah, if you guys get value from the video, definitely like the video, subscribe to the channel if you haven't already, and yeah, it's much appreciated. But yeah, so yeah, because we haven't really got that retracement, there's a risk of at some point in this week, price may be responding off this monthly fair value gap to give us a retracement, maybe back up into this area. I wouldn't be surprised if that takes place, but obviously we need some evidence providing, clarity as far as whether that's going to take place or not, and if it doesn't, right, we don't demand that. I'd like to see that, but if we don't see that, obviously we'll continue to press price lower in the indices. In the DXY here. But yeah, that's pretty much what I see here in the DXY. Just kind of flip around a little bit to see. And again, we've been calling for this low for a while, and clearly it's, it was supported and prices definitely fell through. You can also kind of observe this inversion for value gap, how it broke through that. We've definitely danced around inside that range, and it's been used as dynamic resistance. Right, see, and the midpoint here was respected, right? So that is a justification as far as why price hasn't really had the chance to retrace, really, on top of all the negative news for the U.S. economy. Or just not negative news, but negative things that have been taking place, or the negative impacts of certain actions, which, in my opinion, it's all necessary, because we've been artificially propping up our economy for too long. But it is what it is, right? But yeah, so we'll see what the response is going to be here going into the 6:30. Again, because there's no news, because it's CPI, because these heavy news events can sometimes trick people. We're going to continue to wait, especially because the news comes out later. We're going to wait and assume that manipulation will probably come later, and we'll see how these levels are going to behave. But again, this is our overall skeleton framework. We got our different targets below us. If price was to give some type of strong displacement, obviously our attention would go back up to this daily fair value gap here, this swing high as well, because those would end up being the near-term counter-trend target as a result of us potentially responding away from this opposing PD array, right? Opposing PD array in relation to this downtrend. It's a bullish fair value gap on the monthly chart. So I've been talking about this as well, framing out counter-trend ideas or understanding the concept of counter-trend trading. A lot of times when price is, in this case, being bearish, like dramatically, and it hits an opposing PD array, in this case a bullish fair value gap, that could generally, in many cases, deliver us a response away from the overall narrative, right? In this case, it would be a retracement to the buy side in a downtrend off the heels of us hitting a higher time frame discount array inside the downtrend, right? So that's again, I've mentioned that before a couple times, but keep that in mind as you study, because it's very important. And once you get comfortable with that, your navigation skills go up, confidence will go up because you understand both sides, and what the impacts are, how to frame counter trend ideas, and then with that skill set, you're then able to have another world of opportunity. Instead of just trend trading, you're then able to reasonably frame out counter trend ideas. And again, the risk protocols would be you cut your risk by half if you're taking counter trend ideas, because it's counter trend. All right, and then if there was a response off this back up to this fair value gap up here, this is when I would then assume that sell side would potentially start to continue again. Okay, and again, this topic is the same on every asset. So as you're studying, doesn't matter what asset you trade, if you keep that in mind, it can be extremely helpful. Doru Khan, it's an interesting name. I appreciate you, bro. If it's your first time here, welcome. I appreciate you coming to hang out with us. But yeah, so let me take some of these annotations off. So as we could see, we've just been in a falling knife, super downtrend environment for all the U.S. assets. The stock market looks like a bloody mess right now. But if you're a smart investor, right, if you invest long term, you just look at things as everything's on a discount. Just like if you're in a store and you see the red tag, that means that things are at a discount. So are you fearful of the red tag showing sale? Right? Are you fearful of that? Right? If not, why would you be fearful if the stock market's down or your portfolio long term is red? That just means that now you have assets you can buy at a discount. And this is where the wealthy position themselves, not financial advice obviously, but that's the difference between seasoned investors and investors that don't really know what the hell they're doing, and they're trying to treat it like a casino. It's not a casino. But aside from that, us as day traders, obviously it doesn't matter what price is doing, going higher or lower. We can participate in either direction. There has been an issue with correlation recently, and that is a very big part in what it is we do here, and how we cultivate clarity, right? We want to see things in alignment with risk on, risk off behavior, and how other markets affect one another. When we see things in sync, it just makes it a little bit easier to trust things. Doesn't mean you can't trust stuff, because there's a crack in correlation. Cracks in correlation generally just tell you we are in a harder environment, a higher elevated risk environment. So if you're a trader that likes to really operate in a very safe manner, not be fearful, but you like to understand when you should lower your risk or when you should push it. This is a beautiful example in time in history where you can observe lowering your risk and save this experience for the future. This is a type of time and environment where you lower your risk. Okay, you keep your risk minimal, and you don't try to hit home runs. You accept base hits, like me and my private community were talking about yesterday. I talk about minimums all the time, because minimums are easier to catch than huge expansions when you're a new trader. Just for reference though, if you want to catch massive moves like this, right, off of this daily chart, you have to do just that. Catch them off the daily chart, right? Catch them off the 1 hour, catch them off the 4 hour, because that's where large moves set up, and then of course the small details and better precision elements are found on the lower time frames. So whenever you're framing ideas in the daily range, weekly range, or long term, you definitely want to frame stuff off of higher time frame view, off the higher time frame view. All right, but even then, that can also supercharge your ability to catch minimums if you're in line with overall price action on the higher time frame. Yeah, exactly, Tony. The amount of risk doesn't matter. There's people that think risking 0.25% can't get you some amazing results, and they just don't know how to do math, and they're impatient. They want to be this gunslinging gambler so they can get the thrill, but at the same time, the market is like a very reckless roller coaster that sometimes falls off the rails. And if you're in a moment where price is falling off the rails, like it is here, and you're not expecting or anticipating higher risk environment, bad habits and your over ambitious view at times can really hurt you if you're not in line with something related to discipline when it comes to your risk protocols. All right. So again, that's nothing to fear when you see things going crazy. This actually should be exciting, especially if you have your rules in place, because now you don't have to worry about blowing your account and getting destroyed. The risk protocols that I showcase here and in my private community, obviously they're inspired by ICT and the things I've learned, but those risk rules allow you to feel confident that you'll never blow your account. All right. So definitely take that to heart, because without risk management, like I've talked about before, it's pretty much impossible for anybody to be successful, aside from the difficulty that's already there in terms of development as a trader. All right. So make it easier on yourself, and don't be a reckless gambler. Prepare for losses, because we all take them. Okay, so price again has delivered to the downside here. We've been really aggressive, so we're going to continue to assume that that's the case. We did see SMT here at the lows, but as you can see, given the overall bearish behavior and interest to short, right, and just all the impacts of what's been taking place lately, that was totally disregarded. We're in an overall bearish environment. Buy side is only useful in the lens of counter trend trading, because we just wiped out all gains since September. Okay, all the gains since September of last year have been completely wiped out. They say $4 trillion has been wiped out of the market. So that's a massive, massive crash. So there's no reason to think that buys are more reasonable than sells. Sometimes there's going to be buys, obviously, because again, counter trend objectives and stuff like that, which we talked about. But those are going to be taken at half risk, you know? And no over trading, no over leveraging. It's not a time to do that. CPI is tomorrow. NFP was last week. So, yeah, make sure that you're very cautious. But yeah, so as far as what we think price is going to do this morning, given what we just talked about overall from the bonds and yields, what's on the news, what the currencies have been doing, it's kind of interesting how the currencies are rallying opposed to the US dollar. Obviously, that's what we want to see. But it's also kind of interesting to see the huge crack in correlation between the relationship with the currencies and the indices. They're supposed to, in many cases, do something very similar because they are reverse correlated to the US dollar. But obviously, US assets are being hammered by what's taking place. So that's where the crack in correlation stems from. We've been extremely bearish. We've hit a higher time frame PD array. Again, I wouldn't be surprised, given the fact that there's been little to no retracement take place. I wouldn't be surprised if we start to see price interested in maybe attacking something like this. This wick here. Some pieces of like the lower quadrant. Maybe even just try to reach into it a little bit. We have to see evidence of that, obviously. Because overall we're in a downtrend, and any type of objective above us is going to be taken at half risk. Okay, so this is what it looks like on the higher time frame. So now if we, let me see. So if we take this and we start to drop down now, it's 6 o'clock. So again, there's going to be no entries considered before. That's the way I am going to choose to operate. It's just it is what it is. Okay. It's not about gunslinging and entering. It's what gets us to the entries that's important. So as a student, I hope that you guys all have that mindset because this is not a gambler channel. Because I like this profession and I want to be here long term. So I'm not interested in throwing anything at anything just because I'm trying to take a trade. That's just not how things are operated here. So there's plenty of gamblers out there blowing their accounts for entertainment. But I don't want you guys to be blowing your accounts. And so we choose to operate in the correct way. But yeah, so if price does choose to give us this run higher potentially, we do see that there is consecutive down candles here. We've came back into this daily fair value gap. If there is some type of displacement, we have our targets laid out. We have this wick up here, the one that I just mentioned from that higher time frame. So let's label that real quick. So yeah, if we do start to see any type of interest to get to the buy side in some capacity, these are the levels that I'd like to see. Of course, that's in conjunction with some fair value gaps. Okay, let me see where this gray. So this gray fair value gap here is a 4 hour. And as we can see, price is definitely punched into that and we're getting some type of response. Unless we get, a pretty strong inclination that price is going to want to reach up here, we're going to continue to observe price declining. Because there has been a huge drop and, there was no real response back above the open here from Sunday, we run the risk of, considering the fact that we hit a higher time frame PD array, it's been so aggressive to the downside there is the risk of price wanting to give a retracement in some capacity. Okay, especially if the DXY is going to continue to, show so much interest to the downside. Of course, we're ahead of CPI, so any type of bias or narrative overall needs to be held very lightly. Tomorrow can change the whole trajectory of what's taking place. That's just the nature of CPI. Again, it's not something to be fearful of. It's not something to lose sleep over or start to doubt yourself with. It's just, again, you got to understand the risk environment you're involved in so then you can properly manage risk. Because that's the number one objective as a trader. I was talking about my private community. What are traders called in the financial industry for the most part? Generally, their title is risk manager. I guess in some capacities in some companies they call them traders, but the description of a trader is to be a risk manager. You're managing risk, and if you manage risk properly and you know what you're doing, generally you'll be able to do what's required and make some gains. But at the end of the day, the number one focus is risk control, risk management. So it's vitally important. Given that that's a fact, you can see just how important managing risk is. And if you've blown your account continuously, if you feel like you're able to call the market but you make money and lose money, clearly you have a risk management issue. So that has to be dealt with through rules. There's simple fixes for that, but a lot of us don't like change. We don't want to be uncomfortable and make those adjustments. A lot of times we think that being very conservative with risk at times can make this take longer to achieve our goals. But if you don't manage risk, you're going to have no opportunity to get to your goals. And it'll if you don't manage risk, it'll take you longer regardless, because now you got to get out of drawdown versus dealing with the pain of discipline and following your rules. The pain of discipline is a lot better than the pain of regret and having to constantly be in a state of recovery. So just a couple more reasons why risk management is so vitally important, and why it has to have a place in pretty much every video that I go live with. But yeah, so we have a pretty clear indication of what the landscape is. Again, buy side targets are up here. If we drop down to the 15-minute, let's go see where the open price is. So we see the open price here. Overnight, price is consolidated. Did kind of shift above the high here. And of course, prices engaged this higher time frame fair value gap. We're inside of this daily fair value gap. So if we start to see price disrespect the highs up here, right, maybe turn some of these fair value gaps into inversion levels, and then maybe it starts showing support at those levels, because things have been so aggressive to the downside, because there's been little to no manipulation, we do have the likelihood of price finally giving some type of strong buy-side retracement. But of course, if that's not proven, we have no reason to push that on the market. It is a possibility we have to consider. But obviously we're going to wait and see what the open provides us, so then we can gain an understanding as far as how likely that is to take place. On the back end, of course, like I've mentioned, we have this daily fair value gap that could turn that into a reality and then kind of set us up with the counter trend idea I was mentioning earlier. Some more little minute details when it comes to the lower time frame observations. We have a new day opening gap in here. Okay, so keep that in mind. So we'll see how price behaves around that. Again, if we do see price spend little to no time underneath this open price here, again, we're in an overall bearish environment. So if we start to provide evidence that there's going to be really no interest in getting up higher, then we'll just continue to seek sell side, and eventually, we can maybe hit this previous day's low here, right? Because again, previous day's highs and lows are generally some of the first targets you want to observe, because if price is going to go higher or lower on that higher time frame, if you look at the candles and where each candle is placed at, like where it's forming at, the first thing to the left is the previous day's candle. That previous day's candle has previous day's highs and lows. Same with the weekly chart, right? If you go to the weekly time frame and you're looking at the current weekly candle, the most current or most near-term liquidity based on that weekly time frame, if you look to the left, there's a weekly high and a weekly low. If those are intact, in order for price to go higher or lower for any other objective, it's going to have to break through that range first. So because that's a fact, which most people don't observe for some reason, those are the first targets to observe, and they're continuous. So if you have an issue identifying targets, that's a quick, easy default that you can resort to start framing continuous setups on a weekly and daily basis. And then, of course, you can mix in London's highs and lows, which is previous session highs and lows, because those are also even more near term. If you're inside of a daily candle, those are even more near term, right? Like, for example, if we double click here, right, this little blue box down here, this is London's low and London's high, right? Those are that's the little time window that shows you where London's high and London's low is. So then if price is going to attack this previous day's low, or say it was going to attack a previous day's high, most likely, for the most part, it's going to have to break through one of those as well on its way to that higher time frame daily high or daily low, or even the weekly high and low, depending on the circumstance. All right, that's a perspective that's very simple. It's something that most people don't get to. It's something that most people don't identify, because they're so focused on what's the most advanced thing that I can get. What's all these different topics I'm trying to master, right? Because there's a silver bullet in there somewhere in this huge 1,000+ video library of information and a vast laundry list of different so-called educators that are trying to sell you something that may not even work for you. This here is a default, never changing situation. This is a always evergreen liquidity pool identification method relating to previous week's highs and lows, previous day's highs and lows, and like I mentioned, previous session highs and lows. So again, this directly neutralizes the issue when it comes to targeting. What can I target, right? Where is a reliable continuous liquidity pool or list of liquidity pools that I can use to frame setups on a daily basis, right? Previous week's highs and lows, previous day's highs and lows. If it's relevant, if you look at the monthly chart, price is close to a previous month's high and low, that's another one. Then, of course, like I mentioned, London's highs and lows. And then, it gets even more intricate and more detailed as you drop down, because then we have new day opening gaps, new week opening gaps, regular trading hours gaps, so on and so forth. And then you take that and you add it on to PD arrays, right? So you think about the highs and lows I just mentioned. If you look around those and find the closest PD array, right, above or below, depending on which direction you go, you have another layer to continuous targeting without being overly complicated. Now deciding which direction price is going to go, what's the highest probability or highest likelihood. Obviously, you can use the method that we use continuously, which is intermarket relationships, COT, seasonality, and then that can kind of continue to assist you in validating, and then of course the validation and validation process as well. So all that stuff coupled together creates a bias and narrative process, creates a targeting process, creates a pretty solid foundational framework for you to answer a lot of the different questions and difficulties majority of traders face, especially when they first get started. And I hope it doesn't seem overly complicated, because it doesn't have to be. So mastering simple things like what I just mentioned can really change things. And of course, the risk conversation. These things can definitely help you tremendously. Right. So yeah, that's pretty much based on what we've talked about so far. It's pretty much the skeleton framework of what we're operating within. I want to see what price is going to do as we approach the open in 10 minutes. We're going to use that as our manipulation. Just kind of see what price really wants to do. Again, there is a possible likelihood that we will see price look to retrace. But again, if that starts to fail and maybe we get a displacement lower, we're still under the assumption that price is still in a downtrend. There's no news or anything that has been positive, assuming that things are going to be bullish. We have had the conversation about bullish seasonal tendency. The seasonal tendency is going to be less effective because the overall market sentiment is going against the potential for bullishness in March overall, right? It's overall bearish. So with that being the case, in a down environment, a downtrend environment, if we see a bullish seasonal tendency, a lot of times that's going to be a time in price where we may see a retracement, right, against that downside sentiment, right? So bullish seasonal tendencies in an overall bearish market are times when you could start to frame out seasonal retracements, okay? And then obviously it's the same view, just opposing view, if we're in a bullish market with bearish seasonal tendencies. Nico said, yeah, I'm learning more to the downside fundamentals. Bearish price action still bearish, and we reacted strong away from the 4 hour. Yeah. So we'll see if that continues, right? We'll see if it continues. Again, I wouldn't be surprised if we do look to try to give some form of a retracement and get price to maybe run up and attack these people. Everybody and their mama's trying to sell right now, So because that's the case, if there's an argument for a short-term buy-side retracement, it wouldn't be unreasonable. And if it just, if it continued, right? So something to point out here too, looking at this consolidation, if we do see a strong impulse higher, another way that we can gain more clarity as far as whether the shorts are going to continue to be favored, right? You see this consolidation, right? You see accumulation here, reaccumulation. Price has gotten above this, so we're in a potential smart money reversal in a 15-minute market maker buy model that may set us up with a higher time frame bullish retracement, right? Inside the downtrend. So if that was to fail, say price tries one more time to get up here, sweeps the highs, and then displaces, breaking down below, these levels we have outlined here. That is a pretty strong inclination, or indication, I should say, that price is not willing to go higher still. So that can be used as a confirmation. That's an example of using market maker model identification to assist us in confirmation for a particular thing taking place. Right, so you can make the argument that this here is a market maker buy model, right? This is a consolidation, could be a original consolidation, right? And then we have this here. This little area in here, right? It may be this or it may be this little small area here. But regardless, this whole area in there, if price was to get up there, if it is going to be bullish and give us that strong retracement, it should be able to have some type of response to the buy side. And that should end up turning into the second stage distribution if we were to get up there inside the larger time frame, which could end up being a potential reversal for a retracement on the higher time frame. Okay, and then we got something down here potentially. So if price was to get up above this area, if we're going to trust this to go higher, right, it should continue to support price in this level and go higher, right? And then if price was to get up here, I'd be fairly confident that price is going to blow out the highs up here. And if this was to fail going into the open, then obviously given the fact that we're in a downtrend, price is extremely bearish. If that is the case and it fails to do this, that's just another confirmation that we could then be pretty certain the price is going to continue to drop. And then, of course, our target would end up being previous day's low. Right? So just a perspective in terms of another element to the usefulness of market maker buy and sell model understanding. Aside from it being an entry tactic, you can also use it as a confirmation for a narrative, right? The failure of a market maker buy or sell model to deliver is telling you something. Just as breaking 3 PD arrays, opposed to what your objective is also telling you something, you know? So yeah, it's something that we talk about a lot. So definitely think about that. That's what I'm going to be observing. If it can't even attempt to get up here, then obviously we're still in a downtrend. I'm going to favor shorts and downtrend objectives until proven otherwise. Right? So yeah, we got 5 minutes. So let's see what the response is going to be off here. If we do end up continuing to stay below, again, we have a fair value gap down here. We have the daily low, previous day's low. Maybe we can move up to some of these larger time frames. See if we can get an even deeper target. We got another previous day's low here. It's a daily candle. We also can make the argument that there is a inversion fair value gap here too. So if it was to get down below these levels, that would be supportive of us continuing to blow out sell side liquidity. And then we got this one down here as well. So it's a monthly low all the way back in September of last year. So yeah, these are some of my views, right, as far as what I see in price. These consecutive down candles here, I did map this on that, I think it was a 15-minute. Yeah, I mapped this as a bearish breaker on my live call yesterday with my private community as price was delivering, right? So price ended up favoring that, didn't even come back into it. And as I always talk about too, if you watch the wicks, right, study the behavior all the wicks are having with each other and the candles. Because if I'm observing sell side or any direction, I want to see how the wicks and other PD arrays along the way are being respected or disrespected, right? Because then you use that in conjunction with what the higher time frame shows, and you get a pretty solid picture as far as what order flow is favoring. Right, so yeah, going into the open, we got 3 more minutes. All right, we can see that there's relative equal highs up here. I don't really like that. Let's see if we can see something else taking place in here. We got relative equal highs up here. It did peak above it a little bit, but we also have relative equal lows for the Dow as well. For the S&P, this right here looks like a bearish breaker, right? It behaved as such and did offer a delivery away from that, targeting overnight sell side. London, right? London session was taken here. So yeah, again, we're going to continuously favor the downside unless something was to change, because we're in an overall bearish trend. We're in CPI, CPI week. We have CPI behavior going on. So because that is the case, we got to make sure that we hold on to things lightly and allow for flexibility, right? The favored direction is shorts, right? So we're going to see if that's going to continue to give us any type of opportunities to participate. We're not going to force things. We have to see our ideas take place All right, we can study this as well, see if this is going to behave in a breaker delivery. Seems as though that is the case. All right, so if we stay below this, that's going to continue to favor previous day's low as our target. This is my initial target, what I want to see. And again, if that's not fulfilled or continues to maybe turn around and start delivering higher shift in market structure, then we have our contingency plan, which is the overall buy side targets. I mean, we have this, we have the rest of the 4-hour fair value gap. It seems as though that's been respected. So at this current moment, we have no reason to think that that's going to be disrespected, right? So yeah. Say we've got this new day opening gap that's being respected. Let's see what the behavior is going to be below this specific low here. Let's see if we can. So again, this became a bearish breaker. So yeah. So yeah, we'll see if these levels can hold. All right, because again, the narrative overall is bearish, and you know, we are due for some kind of retracement. So if bearishness is disrespected, that being, you know, the highs being violated, you know, the breaker ends up getting totally invalidated, then our eyes and attention directly go up to these equal highs here, right? We're going to see what the open does here. Let's see if it tries to favor still delivering shorts, in which case, of course, that's the main objective. Which is, and then of course, in line with that is the previous day's low, as I was talking about earlier. Right, so let's see what the behavior is going to be here. We don't take entries, at least I don't, right at the open. I want to let price paint a little bit because we're engaging right inside of the manipulation, or, you know, the particular area where manipulation can take place. Again, we did shift above this high here. So we'll see if that has an impact. If it breaks through this breaker, again, that is an indication that, you know, we will have interest to try to get back up here, in which case we would then make our flexible adjustment and then see this run above the high here as a position pushing price to the buy side. And then, you know, maybe later it'll decide to attack previous day's low. Yeah, we'll see. If all this stays intact, again, our main assumption is shorts, right? We got regular trading hours gap, pretty tiny. Let's see if it stays below this regular trading hours gap. Let's try to go in and observe our first fair value gap. So shorts, again, have been the main interest, and clearly that is still being provided here. Still favoring shorts. The first fair value gap after 6:30 has not been delivered yet. So let's see what takes place here. Let's pull up DXY a bit. So again, my attention is down here. I'm going to assume this was a bearish power 3. All right, let's see what price does as it sweeps out London's low here. So it seems as though, as we've been talking about, shorts are still being favored. The breaker I showed is clearly still in delivery. So the breaker area here, the midpoint has to stay intact. Otherwise, the sells turn off, right? Let's see if this regular trading hours gap can be respected. Seems like we are now creating our first fair value gap after the open. So price is going to be bearish. We don't want to see this. We don't want to see price get back above this for too long. It can, you know, kind of dance around a little bit. But for us to continue to trust, let's see if it'll. Okay, so it looks like it's going to fill it in entirely. So looking at this time frame, right? No fair value gap has been left. So we now have to continue to wait for that. So let's see what price wants to do here. So again, I don't really like how they left these equal highs. It kind of peaked above it a little bit. I don't really like that. I don't like how they did that. Let's see what happens here. Again, the overall downtrend and interest for us to see shorts take place is still intact. It is kind of being held in here. This is why you don't take entries right at the open. You know, it may deliver, right? It may just start opening up and be a crazy drop. But look at how choppy sloppy it is. And if you go even to the 30 seconds chart, I mean, you could see something in here, right? There's a little fair value gap in there. But now you're kind of sitting through price, which has a possibility to run higher here. It's just very choppy. And again, we have the macros to operate within. Generally, that's the best idea because you avoid, for the most part, having to sit through things like this. The macros, when they come into play, that's when price does spooling or delivers to a particular objective. So it's best to limit yourself to the macros so then you can engage at times where it's more likely than other times to deliver quickly. We're below the open price here. We danced a little bit above it through London, and then now again we've gotten down below. So we will see. We see DXY being bearish. Again, like I've been mentioning, there is a likelihood for a possible retracement given the fact that price has not done anything in that capacity. It's just been falling for the start of the week. And the start of the week is generally manipulation, right? So we'll see if that comes into play and maybe turns this week into a possible run against the downside delivery. So we see this drop here. It swept out London's low. Now we have this up candle here. If it violates this, right, we want to see how price behaves within that. Okay, because then you can take this range here, this high to that low, classify that as a balanced price range, and then also a possible bullish breaker to then try to target these equal highs, right? I mention all the time I hate selling when there's equal highs available, right? So let's see what the response is going to be here. Again, it's outside of a macro. Entering this using my rules and the things that I choose to operate in would be high risk, right? The model's there for breaker, right? For the breaker candle. That's this up candle here. So if a retracement into that was to take place, I mean, ideally, I mean, that's showing you there's an opportunity there to target these equal highs, right? Right, but again, there's a reason why I don't take entries right at 6:30 because, you know, we had a favor for shorts, right? Price swept that. I said, let's see what price does below this, right? We're going to have to stay below these particular levels if it's going to continue to favor shorts. Look what's happened. Price went all the way against it. We've now blown past the midpoint of that. So now I'm fairly confident that this is going to end up taking these highs up here. And I would have needed a retracement into this area here, which is not only a bullish breaker, but it's also a order block, right? We're on the 30 seconds chart, and you can kind of see it's been a little messy in there. But again, you know, price has now done something where we're now allowed to adjust from the overall target, which was downside initially, because we've been now proven with this huge displacement that the buy side could now be in the cards. Our contingency plan aiming for buy side delivery now kicks into effect, right? And we have this fair value gap up here. We have this bullish order block to go off of. Across the assets here, these indices, they're kind of cracked in correlation still. So again, because CPI is ahead of us, because we see this crack in correlation, because it's extremely, very volatile right now, everything is at half risk, you know. And going against the downtrend is counter trend. Remember what I said about this daily fair value gap, right? How that could be the trigger point for a counter trend move on that higher time frame. It could be the reason used to push price to the buy side against this short environment, which everybody's trying to participate in. You can make the argument that this fair value gap here could be a possible opportunity, right? So do what you will with that information. Of course, it logged me out of my freaking broker. Didn't want your boy to win, yo. All right, so now we see this order block here. All right, so again, target at this moment is these equal highs. Again, take this information and think, is this in line with what your model is? If it's not, use it as a study. This is not a signal channel. I'm not here to make you a signal junkie. I'm here to build your confidence so then you can look at these things and do things on your own, both here and in my private community, so that eventually, we're all dynamic savages and we can all be the signal providers and drown out these idiots on social media that are, quite frankly, hurting people. So yeah, let's see what this fair value gap is going to do here. So we got an order block, fair value gap, and a swing low. As long as those things stay intact, this buy side delivery is going to continue, and this high is going to be taken. Because guess what? 1, 2, 3 PD arrays. So this order block, the midpoint should be able to hold. Again, we're outside of the macro. The macro is coming in 10 minutes. Because of this huge displacement, my eyes are up at these highs up here. And if this swing low is violated with the fair value gap and the midpoint of the order block, that obviously disregards this current potential entry up in here, right? This initial entry, if you look at that, right, and if you would have made your own decisions on that, that already offered the 70 points, right? Because we are approaching the macro and we're in such a high volatility environment, sweeping out this low with a small wick, right, just to purge people out, then continue to go, that wouldn't be unreasonable. But obviously, right, this particular entry, to get up above the high up here, that is something that obviously would have been taken out. This initial entry down here, stop would be below this fair value gap. So that one would still be in position. So yeah, let's see if that continues. Notice how it didn't really peak below that at all. Kind of just went right to it. So let's watch the behavior here. It's going to have to get back above this fair value gap in here for this run higher to still be trusted in the current moment. Right? It's going to have to get back above this, turn it into an inversion or a reclaimed fair value gap, so that could then push us up into here. We're approaching the macro, so let's see if the speed can come off the macro to get us up above the highs here. And then once price purges the highs up here, if that's what it chooses to end up doing, we'll see what the behavior will be given the fact that we're still in a downtrend environment. It may just use that as a trigger point to stop people out overnight and then look to give a strong breakdown, kicking us back in line with the initial objective, which was attacking that previous day's low. So notice how we got right back above this fair value gap. So that is a good sign for us to continue to favor targeting the buy side. So it is hitting this 4-hour fair value gap again. So let's see if it could still muster the interest to get us up above this area. So we got the Dow continuously tanking pretty aggressively. We got a fair value gap in here. So yeah, let's see what price wants to do. See the delivery off this. See what happens. DXY is still fairly weak, or fairly interested in attacking shorts. So yeah, let's see if it can have the interest to get up there. We're now 5 minutes before the macro. I've seen that 5 minutes before the macro and 5 minutes after that first 10 minutes of, or the last 10 minutes within the 20-minute span of time, so, sometimes that can be effective too. The moves can be offered around those times, but being as close as you can to the macros, whether you're inside of it or 5 minutes before, is generally what you want to do. 5 minutes after, I mean, sometimes you're late, because a lot of times we want to see our move start inside that time window. So yeah, let's see what happens here. Looks like the Dow is definitely continuing to drop, right? So we may see this just be some type of fake out. I would have definitely, if it does break down here, I would have definitely preferred it to break through the high up here before it ended up tanking, because I mean it's a more thick liquidity pool in my opinion. But again, if it starts to break down here, we now got back below the fair value gap here. Let's see how price behaves there. If it does end up continuing to break down, say we get down below this new day opening gap, that then turns us into the initial framework, which would be targeting previous day's low. And then of course before that, it has this initial AM session low. Where is our first fair value gap? Let's see, where is that at? Oh, so this is the first opening range fair value gap. Again, we got the regular trading hours gap below us. So yeah, let's see how price behaves around here. Notice how we've kind of stalled out. We're inside the macro, or close to it. So we'll see if, again, we could then purge out this high. I'd really like to see that taken, then see price deliver to the downside again. All right, so yeah. Let's see if it can offer that to us. So we have news at 7 a.m. So in about 10 minutes, we have news coming out as well. So yeah, because we're getting close to the macro, because we're pretty close to this buy side, I wouldn't expect it to want to really dig down here since it hasn't already. I'd like to see a pretty strong run through the highs here. Then whatever it does up there would obviously be something that we'd have to monitor. Pretty nice. All right, objective is about to be hit. And London's high has now been purged. Let's see if it can dig a little deeper. All right, so being in the trade here, profits would have been taken at that moment, at least 80-90% of it. See if it can give us that delivery from here too. We have a fair value gap there. Again, the way price behaves at this high here is going to be very interesting. Right? We want to see if it does break down from here. We have a pretty decent framework to continue to attack the shorts. So yeah, let's see how this fair value gap wants to deliver here. So we got this 4-hour fair value gap, and we have the midpoint inside that fair value gap. So let's see if it can't even get to the midpoint and it breaks down. Again, that's another signal showing that we're pretty weak, or pretty interested in continuing to drop if we do get a displacement as a result of that. So we're in position here. So you know I'm not throwing things out that I don't participate in. Stop is rushed right below. Okay, I ended up taking profits there. All right, so you can see an entry was taken using this fair value gap here. Right? Stop was below the fair value gap. Price ended up taking me out right up in here on that first entry. Because of the failure down here, I ended up getting right back in. Rode price up above the high. It ended up taking me out as I rushed my stop right up into this little, the high up there. Wasn't willing to want to sit through because I still have the overall view that price is going to possibly have an interest to break down here. I think this is all part of the manipulation, right? So if price from this high, this was the target. And I said, what price does at these highs, including with this fair value gap, this 4-hour fair value gap, this can act as the positioning tool and the trigger point of liquidity because buy side's been triggered, right? They've been put into the marketplace. They think the price is going to go higher. It may run higher, right? Because like I mentioned earlier, there is a likelihood for a strong buy side retracement because it's been so aggressive to the downside. But now that we've reached up into here, you can see the framework went from one direction. Overall, we came in favoring shorts because of the higher time frame, and that's how you need to do things. Okay. Did you take this trade? I'm kind of showing the trade here. You see, I hope you see the arrows. Are they not showing? Can y'all let me know if you can see the arrows? That'd be kind of weird if they're not showing for some reason. Do you guys see the arrows here? Oh wait, maybe there's like a lag. There is a lag, actually. Okay, for sure. I appreciate you, Nico. Yes, okay, for sure. So yeah, you know, I'm not the type of person or streamer or mentor or whatever the hell you want to call it that's going to get into the market and say, hey, buy here, sell here. I say there's a possible opportunity here, right? And I frame out why. I tell you why. I say what would not go with that idea. And then depending on whether you're comfortable with the information being shared, whether it lines up with your way of trading, you take that information and then you apply it to your own strategy, your own way of doing things, right? Because the fundamentals are the things that we talk about in terms of what gets us to what decision and why. And so why with the objective into, yeah. Oh, it's your first day here? Oh, wow. I could have swore I've seen you a couple times. I could have swore you were here before. Maybe it was on Instagram. Let me see. Yeah, so, but yeah, again, this is the way that I do things in terms of signals, right? I'm not a financial advisor, and I can't give you financial advice. And I don't know how all these other people get away with it, acting like they can get you rich and stuff, because it's literally illegal. Like, it's pretty fascinating. I'm sure the SEC is paying attention closely, waiting for a time to strike. But when I point out opportunities, what gets me to a particular view, I say one thing may happen here, or this would be a possible opportunity. You take that information and all the things we talk about, and you apply it to your own view. And if it lines up with your own view, you do what you will with that information, right? But if it doesn't, right, this is a very important fact. If what I mentioned does not align with the model that you're using, you don't take the trade just because I said, hey, this is probably an opportunity. Because you're here, hopefully, to learn and build your own process. Excuse me. Around some of the things that I share. Because at the end of the day, that's what's going to get, that mindset is what's going to get you to be a profitable trader. Okay? That's what's going to get you to be consistent. That's what's actually important. And for those that, want to know, this isn't a demo. It's Trade of 8, Top Step, for completeness sake, right? But yeah, so you notice how there was one entry taken in this fair value gap. It stopped me out. Did I panic? Right? You probably saw my facial expressions. You probably saw how I was operating within this. No stress, not worried about anything, trusting the fact that price was going to continue and most likely get up here. And I said that if it didn't get up here, right, if it just continued to fail, if price had a failure to get to the midpoint of this and rejected away pretty aggressively from the 25% level of this fair value gap, that is an indication that price is still going to favor sell side. But first, I said I would like to see a buy side target met, because price manipulates and acts this way because they want to get up to the opposing liquidity, punch them in the face, get them dragged into the market thinking that they're on the right side, and then it obliterates them because of what the higher time frame is doing, not what the lower time frame is fooling them with. Okay. But again, this is the favor as far as what I want to see price do, at least given what we have just seen. I would prefer to now see price start to break down, because now I know that work's been done up here. So if I didn't take a trade in here, I'd be trying to identify, is there any reason for me to take a short if all this stuff is going to continue in terms of the higher time frame, right? We saw this breaker get violated, right? So that is where my interest came from when it comes to price getting up above here, right? That's what triggered me to think, okay, I can probably catch an opportunity to go higher here. Right, we now see that there's a shift in market structure here aggressively after buy side was taken in the higher time frame downtrend. So now we'll see, is this fair value gap gonna lead to price getting down below, right? And then maybe eventually targeting the overall sell side, previous day's low, right? Or is this going to continue and give another leg higher to then come up here and sweep out some of this? If you look at the overall direction and price is now, it's in a range since London, right? We're still range bound here. All right. So depending on what price does here, how it behaves, right? If we end up running aggressively through all these levels, notice how the other breaker we had, notice how it's acting as a potential inversion level, right? Let's continue to monitor what this 4-hour fair value gap is going to do. we came right down below the open price here. And you could see the new day opening gap, price stayed above that. The first New York session fair value gap, price has now stayed above that. This inversion fair value gap that I was going to use for the first entry, in line with this order block as well, you can see how prices now came down into that, and it's acting as support for now, right? Overall, I don't know if it's me, but you look like a young... That is interesting. Is it because we're white? Like, oh man. That's kind of dope. Maybe it's the beanie. Yeah, hopefully the performance can be more of a similarity, right? Well, none of us will ever become ICT himself, clearly, because he created this stuff. So, hopefully we can get close, though. All right, so yeah, like I mentioned earlier, so now we have 7 o'clock news that came out. Remember I said there's a possible shift here. This high being taken will most likely lead to previous day's low being violated. Right, at least that's my assumption. That's what I'd like to see. Now, if this continues and we get a super strong response back above, then obviously we may have in the cards another delivery, maybe to fill in the rest of this for our fair value gap. Right? DXY is expanding. It's kind of interesting how we are continuing to have this weird correlation where DXY and the indices are moving together. Maybe it's because they're both getting hammered with all the crap that's going on. They're just like, yeah, let's be partners for a little while. So yeah, price is still giving us this response above the highs, right? So like I mentioned at the very beginning as well, it seems as though, we may see a time where we start to retrace using the daily fair value gap we were talking about too at the very beginning. The performance too always makes me... Man, to be honest, shoot, I wish I was his son. Shit, he'd be an awesome dad. I don't even have a dad, so it'd be pretty cool. But yeah. So yeah, let's continue to watch what this does here. Again, we're inside the macro. Okay. We're inside the macro. We're still dancing around this daily fair value gap. Price is now back inside the range. Let me pull up a cleaner chart than this. Where is... So yeah, here we go. We attempted one more time to get up above. So I'm pretty much still on the side of seeing price give us more of a decline and attack that previous day's low. I definitely like this. This definitely supports that assumption. So let's continue to monitor that. Let's still be on the side of, price is probably going to continue and, potentially take out that previous day's low. I'd like to see that, given what we're seeing here currently. We now got a new run on stops, a new shift in market structure. This large down wick here, if we can accelerate away from it, I highly doubt that we'll get any type of deep retracement back into, this upper fair value gap. I don't think that if this continues like this, given the large wick, right? So offered both buy side and sell side here, and then we see this huge fair value gap. If this is going to hold and continue to go lower, I doubt that this is going to even be attempted again. Even the midpoint of this wick, it'll probably leave that available and then now continue to tank off. So any type of entry or assumed entry that could be taken in here, stop would reasonably go above the wick here, right? And then we should be able to reliably see this drop off the face of the earth back down to the lows. So yeah, notice how what I just mentioned, how that's staying intact. And what I just painted out is another reason why some fair value gaps won't get attempted. It's another little nugget related to how you can know when a fair value gap should be attacked or not. So yeah, pretty beautiful. The analysis this morning, the conversations, obviously you've seen the flexibility and the performance. You've seen me not disregarding my higher time frame narrative. You saw me frame out a counter trend trade. You saw me have the execution and prove that I took the trade and profits were taken. You saw the different behaviors, right? Things that I pointed out, like this wick I just mentioned, how it should be able to hold, and an entry there would have been decent. That was another slip in of a possible signal, right? Again, I've never looked positively on signal services because that's how I blew so much money my first year. I was thinking that people were being honest, and they're not. They just want to fool you, make it seem like they're good, but they can't do anything like this. They're scared. They're scared to get on here and put their opinions out. I don't care if I'm wrong, because I'll understand how I'm wrong, and then me being wrong would help you, you know. But then, of course, me being right is also very helpful, because then you could see why I'm right, because I don't hide the process, you know. But yeah. So let's see how this continues here. So we've now created a seek and destroy environment. But again, if it's going to continue to drop, we should be able to see, let's see, is this a potential bearish breaker? Yeah, so we should see this behave as a bearish breaker. So we shouldn't even have the ability to get back above in this area up here if this is going to continue. If we are in fact going to seek out this previous day's low. But if price was to return all the way back into there, I mean, again, it's a beautiful testament to, for one, taking the minimums, allowing you to gain something, even if price doesn't want to be one-sided. But then it also can be showing you the risks, you know, how CPI impacts clarity and NFP and FOMC and, you know, so on and so forth. Right. So again, remember, like I mentioned, this down wick here, coupled with this fair value gap, this should be left open if it's going to be reliable to the downside. Because when you see a large wick, in this case a down wick, coupled with a fair value gap, the midpoint of that should be a balanced price range. This whole entire wick here should be very responsive and be able to hold price down in this case. Otherwise, if it was to violate this, I'm very confident that we're going to continue to blow out buy side and then have a deeper retracement. So yeah, keep in mind this level here. So I hope you guys have been getting value from this call. This call has definitely been pretty eventful. I mean, the analysis has been pretty on point. Things have, you know, the red flags that have been available to us, we've been pointing them out, how to navigate, you know, not being too worried about it. I got stopped out on one trade in this little mess here, but obviously the things that I was mentioning allowed trust to get up above the high. Classified this as a run on stops, shift in market structure, fair value gap, entry was taken, and then of course took profit at the highs. So now we're in the process of monitoring whether this is going to be trustworthy, so then we can get that initial target, previous day's low in this case, see if a framework can be presented for us to get down there. Invalidation is whether this wick holds, because this fair value gap should be able to act as a institutional order flow entry drill, or that, you know, the midpoint being respected. I would have preferred to see it not get traded into at all, because again, this should be acting as a balanced price range. It's a little suspect given the fact that we've had to come all the way back into it, right? So that makes it very suspect. We're now also, if you take the high to low, we're right at equilibrium given this range, right? So we'll see what happens. We would have to, in order for me to trust a short, right, we would have to get down back below this first fair value gap, get back down below this new day opening gap, and then right back down below these consecutive down candles I showed earlier as a potential bearish breaker. Otherwise, again, prices, you know, it has a likelihood of running up in this area. At the current moment, I wouldn't be interested in throwing an entry because of the simple fact of, you know, the things I've just mentioned. Now, if price was to give a strong movement through back down below here, Again, I would like to prefer to see previous day's low get targeted this morning. Right, but so yeah, you see how this is behaving here? This turns off my interest, right? Because this should have been able to act as a balanced price range, right? So short opportunity has been completely turned off. No entries were being considered because of the simple fact that it didn't stay below this area I was talking about that should have held if we were going to get a healthy delivery to the previous day's low. Now I'm pretty confident the price is still going to continue to, maybe even reach to this 4-hour fair value gap. Right? And if you look around, we don't really see much of anything related to any of the models. At least the models that I use. We may see this actually turn into an inversion fair value gap here. So yeah, price was to break above that. Excuse me. If it was to break above that, I'd like to see how price behaves with that. But again, at the current moment, given what we're seeing, I'm not interested in throwing money at this. Especially since we already took down a pretty decent run. It was what, 50 pips or 50 points down from this. Notice the wicks too right here. If you would have missed this, right, the initial opportunity, which was taken at the fair value gap, you could have waited for this for a further confirmation, right? How did it trade in this wick? It behaved beautifully. Respected the midpoint, justifying even further that order flow is still going to reach to the buy side. But yeah, so now we're in a moment of observation, seeing how this is going to behave. I can tell you one thing, that if this high is violated, this then becomes, I think that may be a stretch, to be honest. I was going to say, maybe you could consider this as a bullish breaker. I think it's a stretch, to be honest. It may be able to work out, but I don't know. I wouldn't. What we're seeing here doesn't scream comfortable, right? Doesn't scream like, yeah, I'm super behind, price running deeply to the buy side. We're now stuck at consolidation now inside of this overnight range, right? So we're going to use this high, this low, that equilibrium area. It's kind of busy. I'm sorry about that. But we'll use this equilibrium, this new day opening gap, and this first fair value gap here in conjunction with the possibility of price getting down into here to help us confirm, if we get down below these levels, I'd be a little more confident in trying to see this initial target, previous day's low targeted. We do have this as a possible run on stops. We'll see if we can get another displacement down below, because then these consecutive up candles, if price can get down below this low, may be able to be used as a bearish order block. We've got this large thing here. Only way that I'd be comfortable with getting into something is if we break down below this and can use this order block as a potential bearish order block, right? To then target the lows down here. All right. See, I like that. That's pretty nice. So look, you can see this as a run on stops. If it breaks down below this, could create as a shift in market structure. And this could end up being a continuation, right? This run on stops up here, big time shift in market structure, right? This may have been a possible move to short. DXY is rallying. But inside that overall, larger swing, you can also see a swing low. Price ran up above buy side into a premium. If price can displace below that and leave a fair value gap, we also have overlapping PD arrays in here that can be used as resistance. If it can use that delivery and then deliver away from it, again, getting below this level down here is more of a conservative way to view things, right? So I'd like to see if that can take place. The reason I would not be fully invested into making an entry up in here is simply because there is a seek and destroy view taking place. It does not promote me to want to throw money at it. Because since we're in a consolidation, since we're ahead of CPI, since price is extremely cracked in correlation, things are much more volatile and reckless than normal. Again, we need things to be very clear. This right here from earlier was very clear, right? There was a risk, obviously, of it punching us out, but before any type of shorts were going to take place, if they took place at all, I would have definitely wanted to see it do this, which, again, the logic was given as far as why that was anticipated. So yeah, let's see what happens here. If we can get a displacement, again, my eyes go directly to this previous day's low. I hope today has, today and then, of course, every other call assists you in seeing the value in, putting a lot of emphasis on previous day's highs and lows, previous week's highs and lows, and even session highs and lows. London's low was used to trigger this move higher, and then London's high was taken. London's high was taken, and if this ends up tanking, that means London's high was paired, that liquidity from overnight was paired to target the previous day's low. So you can see we're working inside of a framework using both of those specific areas in that higher time frame narrative, which is overall bearish. Right, so you can start to see things piece together and create us this picture needed to build deeper clarity than most traders on the internet. So yeah, let's see what happens here. Now I can go out on a limb and say that if price was to break back above this fair value gap in here, that may be an indication that we're not done targeting the buy side. Right, so again, I would like to see a displacement. I don't want to see a slow, dragged out move that brings us to the low. I want to see a displacement. I need some true evidence. Right? If not, again, there's a risk of this continuing to, maybe want to ram through some of these people at the buy side. But again, equilibrium, right? In this range we're looking at. Notice the behavior. It's very, very slow. It's not screaming, hey, I want to go one direction. It's like, yeah, I'm going to hold very slowly, fool people, taking out one side, taking out the other side, and then just right back to the middle. This is very typical type of price behavior that ends up destroying people ahead of CPI, during CPI, on NFP week, throughout the week, day before, day of, and day after a holiday. Interest rate announcements, right around those times. This type of behavior takes place. And if you're gunslinging, like you're trigger happy, people probably took a short, got stopped out. Probably took a buy in here, now they're going to get stopped out. But we're comfortable in identifying the higher time frame, what that's doing, and looking to see evidence that that's being supported, so then we can trust the fact that we're going in one direction or another. So now that we've gotten the displacement I mentioned, I'm pretty confident that this low is now in the crosshairs. So we got a fair value gap in here we could watch too. Regular trading hours gap we could watch. Let's see if we could keep price below that. Right. So remember what I mentioned a second ago as well. Displacement below this low, right? So run on stops. Shift in market structure. Right. So let's see if this first New York session fair value gap, this new day opening gap, and then any fair value gap inside here can actually be used as a supportive idea to continue to press price lower inside this higher time frame downtrend. You see this daily fair value gap, right? We were using this daily fair value gap as a possible area that would trigger a retracement if it was going to have one at all on that higher time frame. But you can see the midpoint is right here on that daily fair value gap. Not only is the equilibrium on this time frame in the current range being identified as an area where price has slowed down, you can also see how that's in conjunction or in alignment with the daily midpoint of this fair value gap. We're doing a lot of work, as you could see, inside that higher time frame level. And one thing I mentioned earlier as well, in terms of the market maker buy model, right? I mentioned that if we get above or get a displacement, deeply retracing, we have market maker buy model phases that we could outline. And if they are to fail, that is an indication that we'll continue to stay in the downtrend environment. Notice how it couldn't even break outside of that at all. Notice how it respected the fair value gap here, the 4-hour. Couldn't even get to the midpoint, and now we've declined, right? We'll see how that wants to continue to deliver, right? You can see on this time frame, very overlappy, right? Very, very much in a sloppy, tricky environment. So the next macro that's coming is going to be at 750. So that will be when an assumption will be placed yet again for possible ideas. So yeah, let's continue to see how this is going to continue to either chop around or give us some type of meaningful displacement, because now we're right back to equilibrium again. Okay, so this again, you see this taking place, you don't throw entries in. I don't care how ambitious you feel, how excited or determined you feel to do this or do that. Determination is great, but you also have to have reason. We got to wait. Again, I would prefer, if I'm going to trust sell side to continue, I want to see something like where's the order block? I want to see this order block turn into something meaningful by seeing price break below that. That would justify a framework for us to get down below the previous day's low. Right, again, right now, right, we took that first move up, taking out the buy side. The response off that buy side, I was anticipating for price to then look to want to short, if it's going to short at all, and be presenting us with something clean and worthwhile. Now that we have also failed that market maker buy model, at least for the time being, it seems as though we're still going to favor shorts. But you could see that we're in an overall time distorted type of environment ahead of CPI tomorrow. And you could see how magnetized the equilibrium is when price cannot break away from it, when it's just being held there. You could see everybody's getting destroyed in here. They come in probably anticipating, given the fact that it's been so aggressive over the last couple of weeks, then they come in here and see this being aggressive. They're probably in the market with a mindset focused on rapid one-sided moves, and then all of a sudden price is now stopped because we're ahead of CPI, because there's a reason for it to be paused, right? And they're probably in there trying to throw entries while we're over here sitting on the sideline for a second after we took an entry that was beautiful, right? It was very easy to capture that. And then now we're observing this response away from it. And the only time I'm going to be comfortable, given the fact that, this wick, right, the response wasn't very aggressive, and we created a 5-minute bearish order block, I'm going to prefer to frame something off that 5-minute order block, because this 5-minute order block can probably give us the juice needed to target this previous day's low, given the fact that this, it's somewhat of a higher time frame, right? And this analysis is in line, with that overall downside delivery that we're favoring over buy side, because, price has not been interested in really rallying. There's no reason. There's been no reason. That may change during CPI, possibly. But again, unless something changes, we stick to our narrative. Any type of objective going against that is counter trend. This was counter trend, right? If money was made in something like this, then you'd sit on the sideline. That's enough. 50 to 100 points, is that not enough? Right? Whether you entered here a little bit late, whether you entered and closed right before, or if you closed after, that offered plenty of opportunity. And here too, if you would have used that idea I mentioned earlier, how this was a run on stops, this was a shift in market structure, maybe you chose to try to participate in that, trusting my assumption that we're going to target the previous day's low. Guess what? If that's something you would have trusted, kind of going against what I was kind of mentioning though, with the equilibrium, even that offered something, high risk, But the logic here, right, this is repeatable too, continuation variations, but aside from everything else, we're seeing that price is in fact favoring our initial objective, which is leaning towards the previous day's low possibly being attacked, You could see how the levels I mentioned to watch if price is going to be supported to the downside. You could see the first New York session fair value gap. You could see the new day opening gap from yesterday. We're staying below it. Regular trading hours gap, we're now below it. You can also see how the equilibrium here, and then from overnight, right? If you go from the 9 o'clock time, find the low, and the high prior to 6:30, we're also below that equilibrium from the overnight range. So given those factors and the fact that we're in a downtrend overall, this is just more supported by that analysis than buy side, especially given what we see here, right? So again, us continuing to favor and root ourselves in the higher time frame allows us to be comfortable with something like this continuing to go lower, even after we see price do this, right? It was a little skeptical given the wick and this fair value gap, preferably being respected, but we could see in the grand scheme of things, it was respected, right? It didn't violate it and use it as support, right? So since we got down below these other levels I mentioned as well, we can rest assured that price is more likely in this case to target sell side, or if it doesn't do that, it's probably going to consolidate. So that's the assumption, unless of course we got a huge displacement back above these levels, which at this moment, given what we see currently, I think it's highly unlikely. Now we're below this 5-minute order block, so let's see if we can respect that. I notice how price got below it. Now we return back in here, and it's being respected. You see these consecutive up candles. If we go to the 1 minute, maybe that's another possible order block. It's another order block here inside that larger one. Right, we could see prices, really respecting the levels that we mentioned, should be holding price if it's going to go lower. Right? Notice how we delivered around this open price here too. So let's see what the response is going to be here at this order block, this 5-minute order block. Okay, do you guys have any questions about any of the stuff that we've talked about today? Talked about a lot, as usual, because there's a lot to talk about. A lot of different things, a lot of different factors, a lot of different things we got to keep track of, but it doesn't have to be overly complicated. But we have a very organized, repetitive, reliable system here, right? Obviously, it's many elements from ICT, but it's uniquely put in our own systematic system. Not everybody uses the things that I talk about. A lot of the stuff is available, obviously, but we're all different. We're all very unique, and because that's a fact, some things will work more for others. Some people will use other things versus other people. But that's, again, I've mentioned it before, that's one of the beautiful things about what it is that we do and what we learn in terms of ICT concepts. We are given the ability to create our own systems. And ICT has even came out supporting the fact that we are allowed to create our own systems. Not say that we created certain topics, but the way that you organize your system is unique to you. The entry time frames that you use, the model you use, and how you use it, all of it becomes very personal. And you could rest assured and be confident in the fact that you've created something that's your own. You can call it your own, and it's not taking away from the author. ICT came out on I think it was in one of his YouTube videos recently, and he was talking about that topic. He doesn't like people claiming they created something, right? Like they created this or created that. You do create your own systems. Like I mentioned, he gives us that ability. But you can be confident and proud of the fact that your system is yours. It's unique to you. My system's unique to me. No one else trades like me, other than the people that kind of learn, some of the things that I talk about. But even then, you could learn some of these topics and then use them on a different time frame, use them in a different way. But the core foundations of the analysis can be the same or similar. But even then, you can still be proud of the fact that you have your own system, and it's yours, and no one can take that from you. And that's why I teach the way that I teach, because I want to still afford that to people. Because not everyone's going to be able to use the models that I use. Maybe one's going to be favored over another. Maybe one concept is going to be favored over another. But I think that if we take that special aspect away from people and try to force feed them one single perspective with no ability to adjust or make it your own, I think those mentors are doing people a disservice, because if that's not what ICT did, why are we going to strip that away from people and force feed them some perspective that maybe doesn't resonate with them? The concepts in a lot of ways could, a lot of the concepts could really work for people, but there has to be an ability for some customization, some flexibility, and some ability to be able to personally create your own view. So I always think about that when I'm over here mentioning things and talking about some stuff. But yeah, remember what I mentioned about this order block? Let's see how this behaves. Is that going to be the trigger point that pulls us down to here, like I mentioned? All right, let's see what happens. So invalidation for any ideas to favor sell side delivery. It's going to be if price gets all the way back above this new day opening gap. I'd have to afford a little bit more flexibility here. But again, this whole up movement here, because this is a bearish order block, and order blocks create balanced price ranges, we would prefer to not see price come even close to this 50% level here. Remove that. So we should be able to respond fairly strongly away from this. So this is a beautiful learning lesson here. So when you look at the higher time frame and price pulls back into a higher time frame level, and say you think this higher time frame level is going to be what pushes price in a particular direction. Say this order block is what's going to push us down to this previous day's low. When price delivers into that, we take the lower time frames, go in there and start to observe, where is our model performing, right? Where's buy side liquidity? Say we're doing the YouTube model, right? Where's buy side, right? If it's going to be responsive from this level, here is a swing high. So if price was to run it and then displace below that, giving a shift in market structure, the next fair value gap would be presenting us with an opportunity to catch in this case, a YouTube model with all the rules intact, framed off of a higher time frame PD array. That same logic is used when we utilize the daily and weekly and monthly charts. When price pulls back into those higher time frame levels that we want to see a response from, we take that information when it gets to those levels, then we start to drop down and try to identify opportunities. Right? You take all that information, then of course we go down to these lower time frames and narrow it down even further to the macros, to better times in the market where things can deliver. But again, all rooted from that higher time frame. And it's such a vitally important perspective to have that it's unfortunate that a lot of people overlook that fact. Because they're in the pursuit of, I just need to get an entry. It's not all about the entries. It's also not all about bias. You can have bias and narrative knocked down, but if your entries suck, Like if you are horrible at identifying things, if you feel like you enter at the wrong times, which can be improved and fixed obviously by using the macro rules, not trading before the 6:30 open, because again you're getting manipulated, and if bias is normally correct for you, that's a simple fix as well. But yeah, see how price came up into that and hit that 5-minute order block. If that's going to be the trigger that gets us to the lows down here, we look for the rules to kick in. And it's the same with every model, right? You could look for breakers, you could look for optimal trade entry, you could look for, whatever your model is. It's the same thing. When price gets to a higher time frame level based on the entry time frame you like to operate within, once you see price get into that level, if you could frame that level to a higher time frame thing like the previous day's low here, once it gets into a level like that, you zoom in at that point. That's when you zoom in and start stalking entry. It just goes back to how ICT says the higher time frames where he spends most of his time. This is part of the reason why. Because, this is a highly effective way to help narrow down timing a bit. And then you get even closer when you talk about macros and things like that. So yeah, you could see that the behavior from that order block I mentioned well in advance, if price got below it, I'd like to see a return into it and then a response as a result. And we could see that's slowly coming to fruition. Let's take a peek at what these so the Dows fell off the face of the earth. The S&P, they all kind of fell pretty strongly. Seems like the Nasdaq is the strength holder. We do have a fair value gap in there. Price is traded into. So yeah, we can also see that that's the daily fair value gap too. So yeah, price has done a ton of work inside that. Friday's low was violated, right? When I started the week, pretty much every week I talk about Friday's high and low. If it's going to reach into anything like this daily fair value gap, it's going to blow that out first. Friday's high or Friday's low. Sometimes Friday's high can be triggered in like London was today to then pair an attack towards Friday's low on when you're looking to trade on Mondays. It's kind of a perspective you want to have. Yeah, fairly interesting how, oh man, look at how vicious that drop is. It's incredible. But yeah, so now we got, we're confident that this is going to continue to do what it's doing here. So yeah, we'll see what happens. For an entry opportunity, I would have preferred to see price displace below this low after it hit this. It's kind of slowly delivering. I do still think that I favor the previous day's low being attacked here. You could reasonably look to use maybe this as an order block as well. Use it as another order block. Right, so yeah, that 5-minute order block I mentioned, you could see its importance inside the delivery here. So now we got a new order block, right? So price ran through the buy side here, finally got a displacement. Now we have another order block here, 5 minutes up here. Is that another 5 minute? No, it's a 3-4 minute order block. But now again, we have a displacement here. So again, same situation, right? We want to see how price delivers up into that. This fair value gap here, I'm assuming if that 5 minutes going to, in fact, get us down here, this right here should act as an institutional order flow entry drill. Should be able to get us down to the previous day's low from there. Assuming that obviously things are going to be kind of clean. We'll see if that even is the case. Because this is an order block, the midpoint of that should be a balanced price range, similar to this. That's why price didn't even attempt to get back up there. It acted as a balanced price range. So same with this little order block. This little range in here should be able to act as a balanced price range given an order block was formed. That's what an order block is showing you. you know, and then of course it's also a trigger showing the state of delivery change, or if it fails to change the state of delivery and create the order block, it shows you that we're not done with that other delivery it was doing before it created the order block, or attempted to create it. So yeah, let's watch this fair value gap in here. We do have S&T at the lows, so you know, we'll see what happens as a result. It has delivered pretty aggressively. This would of course be cutting half the risk because we're well beyond a premium and we're pretty far away from the open price, which would have presented the best opportunities somewhere close to it or above it for a short. I notice how the buy here was close to the open as well. Yeah, I'd like to see a return into that. Let's see if that can offer it to us. All right, we also see a fair value gap in here too. 2 minute, or on the 1 minute. Some order block. So we got an order block and a fair value gap. So yeah, let's see what happens. This entry in here would be cut half risk, knowing that, you know, we also see the S&T down here between these assets. Right, the Dow, the S&P has blown out the lows, but the Nasdaq has not. So technically, we're inside the strength holder between the three. That's not to say that, you know, this won't deliver. It's just one of those risks. So an entry here, stop would go above the fair value gap or the candle that created the fair value gap. But again, it's a very high risk. You'd have to accept that, you know. And also, if it doesn't align with your model, just observe this to see. You know, if this holds, it's going to further support our assumption that this previous day's low is going to be violated. Right? But we'll see. If it gets left and then starts to really attack buy side again, I wouldn't be surprised if that area gets left for CPI tomorrow. I don't assume that that's going to take place. This is fairly reasonable for us to still consider this as a trustworthy delivery. I mean, we're already almost to the minimums being attacked just off that. Yeah, the minimums have already been fulfilled based on what I promote. So that was a beautiful entry. Even if it turns around, if you follow the minimums rules that I mentioned, taking down, you know, 20 to 30 points when you get out of the market, especially in a crazy environment. If you follow that, this would have been profitable. If you hold it and it turns around, that's evidence that sometimes you should be able to accept the minimums. At all times, you should accept the minimums if you're not profitable at all, because it's easier to get 20 to 30 points regularly, even if it's just a small response that ends up turning away and then breaking through what you assumed. It's easier to do those smaller bite-sized moves than it is to attack larger, higher time frame, 100-plus point objectives. Again, that comes from the higher time frame view. That's why it's so important. And that's how you can see ICT smack out hundreds of points, because he's in there on the higher time frame, framing things like we did with this 5-minute, but he's doing that logic for the higher time frame. So he'll be looking for price to move into a daily bearish order block. Then he'll drop down to the 1 hour, try to get a framework there, and then he'll drop to the seconds chart to make his risk smaller in alignment with that overall order of operation. And then, you see the spectacular moves that he takes down. Rather consistent. So yeah, let's see if this will continue. So again, thinking about the 3 PDA rule for this particular time frame, for this particular entry, in this particular price swing, we have one PD array, we have a fair value gap here that's used for the potential opportunity. We have this order block, we have the midpoint of that order block, and then we have more swing highs up here. So if it was to violate this candle here, which would be the assumed stop loss inside this kind of extended already continuation move potentially, if that was to violate this, there'd be no reason for us to try to put another entry in and try to push, force, because I mean, now you can see, look, if it runs this high, let's watch how it behaves up there, right? So again, if you didn't take the minimums, if this was something you would have engaged in, here's exactly what I mentioned. It could turn away, could turn against you, because it's in a potential scenario where it's kind of lethargic. We're ahead of CPI, and we're already way beyond where the ideal entries would have been. So yeah, we'll see how this behaves. It just purged out this high. So this order block, aka balanced price range, small mini balanced price range, has now somewhat been invalidated. Let's get the actual midpoint, see what it looks like. So it came right to midpoint there. So let's see, what's the DXY doing? DXY is stuck. DXY is not doing much. Let's see what's happening here. Again, there's SMT at the lows here. Nasdaq is the strength holder out of the three. You notice how the Nasdaq it's moving stronger against the shorts, and it's the only one that made the failure swing. So if you're looking to short and you have a couple of assets that are correlated that you're using, and you see something like this, right? If you're trying to short and you see an asset that you're trying to trade provide the failure swing, just know that that may be the one that gives you trouble. It may be the one that has a harder time going lower, because it is showing that it's the strength holder, right? It has a less interest to move as aggressively as the other correlated assets, in this case to the downside. So it may be the one that either turns around entirely and refuses to do what the others are doing. It may be the one that has a harder, more high resistance delivery to whatever objective, if it does end up getting down to that objective. It just, it's one of those things that if you have correlated assets, you want to keep those things in mind. So yeah, the midpoint of this order block that I mentioned, we've now violated it entirely. I wanted to see how the behavior would have been here if we would have used this and then maybe got back below this. That would have continued to validate that we'll still possibly have interest to come down here. Let's move up and see what's going on here. Yeah, so all of this here indicates that at least this entry that we pointed out as a high risk possibility, that has been turned off, right? And then the minimums were offered, and this is a beautiful example of showing how the minimums can benefit you even if you see price turn against you. 20 to 30 points is fairly simple to get, even if it's just a small response from a particular PD array that potentially turns against you. If you take down those minimums, it's easier to get there, rather than, of course, trying to aim as a new trader or someone that's still trying to gain profitability. It's easier to gain those smaller objectives on a regular basis versus trying to capture hundreds of points. So you want to definitely think about that if you haven't been able to at least be a little profitable here and there. Even if you're break even or not even break even, this perspective can get you to being break even. And if you become consistent enough at identifying this stuff and you're okay with the minimums, you could live there. For the most part, every entry I take, if I get the minimums, my stops moved up to the minimums. And if it takes me out, I don't care. Okay? Because I just want 20, 30 points and I'm out. I don't care who looks at it and wants to be impressed or doesn't seem impressed by it. I don't care. At the end of the day, I'm not here to entertain. I'm here to make money. Okay? I'm here to provide and pay my bills. Okay? And that should be your objective too. Anyone has any nonsense to say about the perspective of taking down minimums, those people that are criticizing themselves are probably not profitable at all. because, having the perspective of not being satisfied with taking down money that's offered to you in a reasonable capacity, like 20 to 30 points, that could be, $200, $400, $500 sitting right in front of you. You really not going to take that? Even if you're doing challenges, you really not going to take that? Right? If you saw $500 on the floor, $200 on the floor, you're picking that up. So why would it be any different seeing the digital money flash or whatever flash on the screen here? I thought the goal was making money, right? The ones that criticize that they clearly have a different objective. Maybe they want to be somebody on the internet. That doesn't get you paid unless you have a plan, unless you have an actual valuable thing you can provide, unless you're a scammer, which many are. But hey, yeah, so let's watch this fair value gap here. If it stays below that could be pretty interesting. Again, we're at a level where, we see this giving a failure swing inside of a logical level here. Let me check the chat real quick. Education is needed for success. Yes. Were you a charter student? Yes. Watching you has started help me arrange my thoughts. Beautiful. Ski, that is very much the objective. Because people are very scattered around. But that's why every week I make it a point to do things very similarly, the same way. I look for the same liquidity. I look for the same things. It's a whole process that's systematic. It's very, black and white. Like, this is what I'm doing every week. These are the stagnant liquidity pools that are always there, and I'm going to frame an opportunity around those. I'm going to use whatever model that's available to me within the 4 that I use. Any of you guys that have one model, you just look at it from the view of your personal model, your model. You don't need more. But things like market maker models and stuff, the logic behind it is very helpful. But yeah, it's part of the goal is to help you arrange your thoughts, because it's very easy to get lost. But that's a complementary, that's something that the higher time frame view, if you pin yourself to that time frame and start to frame your ideas off of those higher time frames, it helps you organize your thoughts there as well. Right? So then when you're on the lower time frame and maybe it's a downtrend and price goes against you, you're not being whipsawed back and forth, making mistakes that end up forcing you to develop doubt in yourself when it's just you're not focused or paying attention to the right things or organizing them, like you said, in the right ways. How did you know how to anticipate what most candles do? So learning how to anticipate, anticipation most times will come from muscle memory, right? Anticipation skills comes from also having a systematic process. But for the most part, being able to anticipate something happening at certain times, or what certain months should do, or how certain price behaviors lead to particular things, being able to anticipate the characteristics, a lot of that comes from having an organized plan, and then it also comes from the experience applying the processes you're learning. It comes from applying the processes repetitively, because if you just do a bunch of random shit every day, how are you going to have consistent thoughts? How are you going to have consistent views, consistent performance, if the process you're employing is all over the place? If you're not focused on one model at first, how are you going to get a baseline to know whether your process works or not? And then of course, like I was mentioning, as far as being able to anticipate particular price action and how price moves, how each candle operates with one another. You when you sit at the chart and just tape read, it's one of those things that ICT mentions a couple times, or he's mentioned it a bunch of times actually the last couple of years. The ability for you to sit there and observe price and watch what it does without the need to take a trade. it's that works in a similar way as having limits on your trades. If you don't have limits and you overtrade and over leverage, you can't go in and rationally observe what's on the chart because you're worried about making it back, making the loss back. You're focused on the loss rather than focusing on the process of trading well. So coming in and tape reading allows you to start to build that anticipation skill, because you're forcing focus on the process and what price action is actually doing in front of you, and then what certain characteristics lead to another, or how they, one characteristic leads to another, how certain price behavior leads to another, and then how overall markets kind of operate together. All of that leads you to better anticipation skills, and it starts to assist you in knowing how to anticipate what most candles will do. And then of course, coming onto calls like this and borrowing experience from people that do things like this, that actually go into the chart and aren't scared to give their opinion, and then seeing it play out, seeing when things go wrong, seeing the behavior of that specific person in those moments, seeing the different things that I point out and others that know what they're doing. Like, for example, the wick behavior, how certain PD arrays should behave when price does something around it, or when it's violated versus when it's supported. Understanding the weekly range dynamics, the daily range dynamics, each week's role in a monthly range, each day's role in the weekly range, and each session's role in the daily range. All that stuff is also very important to nail down too, because that also assists you in anticipating what the month's range will do, the week's range will do, and then each day's range, what they will do. Right? So all of these different pieces afford us the ability to learn how to anticipate what most candles will do. And of course, right, it's just like anything else. To get good at that, it's a skill set, right? It takes repetitive time. That's why we can't just find a model and go into trading and think the model is the solution. If the model is a solution and we don't have any of these other background pieces of information, these other background skill sets, it becomes pretty difficult, to be able to really nail things down and build that anticipation skill. It's one of the hardest things to do because it requires the most time, aside from mindset development, and building the proper perspectives, which that's part of the battles I try to attack here in YouTube, and then 100% every day in my private community. They never hear the end of it. The mindset, risk, how important practice is, always showing up, consistency. All those things are so vitally important in building your different skill sets. I mentioned the other day the 10 different categories to the trading system and the different skill sets that I showcase, and how I arrange different things to make it systematic and very repeatable and easy to stay organized with. All of that also helps you get a consistent process, and then once you get that consistent process, the rest is up to experience and just doing the right things, not letting yourself blow out. Because, if you're trying to learn and the focus is learning, the last thing you want to do, if you truly want to learn this stuff, is go in and rush to try to make money. If you're in there trying to just rush and that's all you're focused on, that's not what's important. Because if you focus on trading well and learn the proper skill sets, the result by default should be to make money. So you don't even got to focus on the money, because that's a given. That's already by default what we're doing this for. We're not here to just paint art on the chart and just admire what it looks like when we place annotations on the chart. All of this stuff is leading to an end. It's leading to consistency. Just like when you go to work out. People go to work out. They don't sit there to admire the process. Some do. But nobody goes there to admire the different tools that are available, right? Or just to admire what the gym looks like. They're going there for a purpose, to get healthy. So it's the same with this. We go in and want to focus on the proper techniques, the proper skills, the proper things that allow for us to trade well, all the different things required. And then by default, money becomes, money becomes the result. So yeah. So yeah, I'm watching what price wants to do here. We have everything still kind of gravitating back to that overall range up here. I can tell you one thing: if this fair value gap here gets violated aggressively, that is a pretty strong indication that we're going to continue to drop. So similar to what I talked about up here, how this created a continuation variation, this too can be looked at in a similar fashion. Now we've taken out buy side pretty significantly. We got a shift pretty strong to the downside. There's not really much of a PD array in terms of fair value gaps to watch up in here. We shifted through this one, but now we have an inversion fair value gap here. So we'll see what that wants to do. Everything else is still dropping, so I'm pretty confident that that SMT we see is going to probably fail. And then, of course, we have this 15-minute inversion fair value gap to watch too. All right, so we got a pretty nice indication here. These consecutive down candles may end up being something impactful. Right, this run down below the low, ran up above the high, came right back into this 5-minute order block. Tested it one more time, and now a pretty strong response off of that. So if we could stay below this fair value gap in here, this inversion, it's pretty likely that price will continue to hold. If we get down below this low here, again, you use that specific range potentially as an order block, possible bearish breaker, and then inside that, maybe you could find a potential opportunity if we do look to favor shorts. It does look very very back and forth, at least for right now. It does seem, if you want to take the extreme high up here to the extreme low, because this is the overall parent price delivery, aside from the delivery in here from the current day. If you take it from this high to that low, that's the extreme range from that parent range. Measure that out, and we can get an equilibrium there as well. And that would explain why price is kind of stalling out in this area. Right? So yeah, price, you can see how price has gravitated back every time. So yeah, this is the parent swing, like I just mentioned. With the swing that created the retracement here. So yeah, if you look at this time frame as well, right, you can see there was a large wick here, similar to what we were talking about up in here. This huge wick in here coupled with the fair value gap, you can see the midpoint of that's respected. I like to see that, right? You can make an argument that this too could have been like an 8-minute YouTube model, run on stops, had a pretty strong shift in market structure. Prices came back to a fair value gap. We also got a down wick midpoint here. So again, that could potentially be a reason that these lows get attacked again. We're in a very, very high resistance, slow moving market right now. It's been very it's presented a little bit more difficulty, right? Obviously, we participated earlier, but to paint some type of short, we did talk about this area, but now that we're way down here. I believe we talked about this as well, but then of course it turned around against us, and that idea turned off, right? So now that we got this response from this 5-minute order block again, it's going to be something we're going to continue to monitor. As of right now, at this very moment, we're back to equilibrium of that larger swing I just mentioned. Price did run above this high, and it did create a new low. So now we've created a new range, but we're inside that parent overall range. So this equilibrium is important. but then also for an opportunity here, if it's going to short, you could go from this high to that low, right? Because this is the high, most recent swing high. You kind of take some of that off. Most recent swing high, fractal high, to the most recent swing low that took buy side and also took sell side. Again, we're inside that parent range, so the equilibrium there is important. This fair value gap here is important. Notice how it's stalled out right at that level. But if we're going to short here, right, if it's going to continue to drop, going from this high to that low gives you another measurement as far as equilibrium for this current dealing range if we're looking to attack the sell side. I hope that wasn't too confusing. This Sunday I can get into a conversation about rolling equilibrium identification and just overall premium and discount if you guys want. I did get a question about that the other day. But yeah, Paramidjit, I hope I said your name right. I did get your message. If I was definitely interested, I would be hounding you. But yeah, if I do eventually need something, I will consider reaching out. But yeah, so I do have one editor in mind that I've been talking to for the last couple months, and he's probably going to be the one that I'm going to work with. So just to let you know. His name is Hivelink, by the way. He is definitely a savage. Okay. So y'all should reach out to him. But yeah, so that being said, right, price again is still stalling out, so there's not much to do. You know, it's just, part of the game. I mean, if you go look at some of the lower time frame, the reason why I'm not hanging out on the lower time frame right here is because guess what? If we go to the lower time frame, you could just see a bunch of people getting stopped out here. Whether you tried to short, whether you tried to buy, you're getting stopped out. I'm in the process of observing what this order block is going to do still on that 5 minute. So again, we're inside the macro, 750 macro. Doesn't seem that it wants to really do much as a result of that. So yeah. Oh yeah, and if you're Paramajit, hopefully I'm saying your name right. If you do want to get into trading, you're definitely in the right place. That's for sure. Yeah, so DXY is having some pretty solid weakness. I think we still have that S&T still intact. You can notice how the Nasdaq is still failing to want to attack the lows. So that's kind of, it's kind of interesting. Ooh, we just saw a pretty nice jump. So yeah, if this continues, and then we get above the new day opening gap, my interest for anything to the downside turns off, and then we jump right back into the assumption that price may still be interested in trying to give a deeper retracement, and then we can potentially, if that is the case, this becomes the weekly low, right? And then we shouldn't see for the rest of the week price even try to attempt to get down here. It may give us the bullish retracement I said could be a possibility this week. CPI will probably give us more evidence as far as how deep we want to take price in a retracement if it does take place. But yeah, so again, if price gets above this regular trading hours gap, I mean, this is pretty convincing somewhat. We are still inside of a bearish order block on the 5 minute. Right, this bearish order block here. So we came right back to the midpoint, really close back into the overall daily open. So one thing I want to point out too, for many of you that don't look at things this way, some of you guys do. If you've been with me for a while, I mention power 3 all the time. But if you look at the open price here, okay, envision this as a bearish daily candle because we're below the open. So this open price here is where the start of the body of whatever candle that's forming, like that's the start of the candle. So because we're below it, currently the day is in a somewhat bearish daily candle, but now that we're getting closer, it's now became an indecision candle. Once it crosses above the daily candle that's forming for this day, once it gets above that, we're now in a bullish candle. But because we're still inside of a range-bound environment, we're tracing all the way back to the midpoint again. We're creating an indecision candle, and it's not really deciding whether it wants to be bullish or bearish yet. It's kind of stuck. This is kind of convincing, though, that we may end up seeing this day end up being bullish because we are very, very much struggling to get down below this previous day's low, and now we're back above all those levels. So what I'm trying to say here too is, mainly like looking at this time frame, even the 15-minute, right, or 5-minute, you want to start practicing drawing out the daily candle, right? So the open would be here. You'd now have a bullish candle with a wick up to the high and a wick to the low, because this is the overall current daily range, right? So it's one of those visual things that's extremely helpful. So then you can start to practice looking at a daily range like this, and you can automatically see what the daily candle looks like. It's one of those, it's one of those things that some people talk about that's important. Just drawing out the candle. The whole point of it is to get familiar with seeing how the daily range is forming, and then how it would look on the daily chart without having to flip to it. You can just already envision, okay, now we're back into a bearish candle because we're below the open price on the day, right? So if it was to close and attack the low down here, it becomes a bearish candle, right? If it was to start attacking buy side, you can envision, just by looking at this price delivery, you can envision that higher time frame daily candle. And it's just extremely helpful because it just gets you more familiar with what's taking place visually in terms of power 3. And then when the lower time frame looks like crap, you want to make sure you're spending time on these upper time frames, like the 5-minute. Don't be stuck on the seconds chart or the minute chart. If you're seeing that things are being disrespected about in terms of your analysis, hang out more on the 5-minute. And then once you see something frame out on the 5-minute, then you can drop to these lower time frames, and things will be a little bit easier. So yeah, I hope that is helpful. Just one of those little small things that people overlook. Being able to identify a daily candle on, say, like the 5-minute or the 15. You could even do the same thing here on the 5-minute, right? You can see this is the story behind the oh crap, I don't know if this is going to be that. I'm not sure if it's going to look the way I'd want it to, but all of this is encapsulating what's happening in the daily candle that's forming, right? All of this price delivery is showing you the storyline as far as what's happening in this daily candle, right? It's just one of those small but very helpful navigation tactics when you're studying. Like, I don't have to go to the daily chart to know that, okay, now price is starting to show a bullish candle. Because it's consolidated overall, I know that this is an indecision type of delivery, right? It's back and forth, hasn't dedicated one side or the other. Right? We've pointed out multiple opportunities. I participated in one of them. One of them, if the minimums down here in the lows, right, if the minimums weren't focused on, would have been violated, right up in here, right? If you didn't accept the minimum, it would have been turned off. Up in here, I did talk about how this, should have held. Once it broke outside of this, there was a opportunity to seek more sell side, which, that was probably the move of the day, right? That's the short of the day. Whether that aligns with your rules or not, obviously you got to wrestle with that. But just observing the behavior, taking the characteristics out, and some of the things that we talked about. Hopefully that's helpful in terms of your experience in navigating price with me today. So yeah, let's see what happens here. DXY looks like, it seems like we may start to kick into shorts because we've now gotten back above this fair value gap up here. We're back above this new day opening gap. If that continues to remain and we start to get even higher up here, this delivery, if it was to violate this high, this looks like it's a market maker buy model on this, 1 minute. Gets even more crystal clear if you're on the seconds chart. Consolidation up here is very wild, obviously, but if price is going to give a retracement and start attacking buy side off the heels of that daily fair value gap we talked about earlier, and it is going to refuse to tackle the lows from the previous day, and the SMT over here is going to stay intact and send price higher, framing the logic that gets us up above that high, using that higher time frame view. Dropping down to this lower time frame, we can nail down some more of the details and just show the dynamic delivery with the market maker buy and sell model. Right, this is now market maker buy model. If we do see it break above the high up here, we're now above the levels I mentioned. That gives a higher likelihood that price is going to attack the highs up here. DXY is falling aggressively too. So if we take this consolidation, we see this as the accumulation phase, first stage. Second stage, we see this low as a smart money reversal once it breaks this high. First stage accumulation was here. We're now inside, first stage distribution that sent this higher was right here inside this. The second stage is in this large delivery in here. So that's a really big one. We shouldn't see price dig down below this new day opening gap or regular trading hours gap, or get back down below this first fair value gap if we are going to go higher. It should be a fast move above the high up here if we're correct in this assumption that this is a possible market maker buy model that's going to aim for the high. Off the heels of the higher time frame retracement and the SMT that's down here. So if it is going to target that, that is a reasonable assumption in terms of the analysis that gets us up above the high. Now, if this fails, similar to how the higher time frame, I think 15-minute market maker buy model we observed earlier failed with this high breaking down. If this fails again, right, and it declines again, and maybe DXY turns and everything starts to drop again, then this is showing us evidence that it's still trustworthy for us to still think that some point throughout the session, this low will end up being violated again, right? But if this doesn't retrace deeply and we get a response back above this, continuing to support that, this may continue to be the market maker buy model we're painting it to be potentially, then that's a framework for us to navigate to the high up here inside of the higher time frame retracement. Either assumption here, because price is in a range right now, makes it a little harder to trust, right? And both of them could fail and it could just consolidate, because that's pretty much the behavior so far. It has been not interested overall to attack one side over another. It has given delivery to both sides. We participated in a buy. We favored shorts that could potentially get us to the previous day's low early on. That ended up failing once I got down into here. And then again, price is all the way up here now, back above levels that I would have wanted to see hold price if we're going to short. So it's not unreasonable, since everyone also is probably trying to short, it's not unreasonable to paint this as, like I mentioned, a market maker buy model, get us back in line with the possible retracement we also talked about earlier. So these are things that are going through my mind when I'm looking at price when it's doing this type of stuff, at least in this current capacity. We see the levels that support price going lower. There is a lot of different things flying around in terms of overall assumptions as far as what price should do. And that's reasonable because we're inside of this range-bound environment. Range-bound environment, higher risk, more sloppy delivery is to be expected when we're in weeks or days that are related to CPI, FOMC, NFP, or any of the other any other news announcements that are extremely volatile. Again, that's not to say that there's no opportunity, right? That's not to say that you should be fearful or think that there's no way to engage. Clearly there is. We pointed out multiple opportunities today. But again, it must be always highlighted that the risk is higher. The risk is higher, so, we got to manage risk properly. And understanding what the condition is and what price is telling us, is just vitally important, because you don't want to blow out. Everybody probably blew their accounts today. Probably hundreds of thousands, maybe millions of people probably blew everything today. Either they tried to force shorts in here and got obliterated, or they were trying to buy early on and got obliterated, trying to pick a bottom. I like how DXY here is tanking. Again, if we're going to see this rally up and attack this high and fulfill this as a market maker buy model, this second stage that we're in, after we've delivered this one, which is a first stage distribution higher, if this is going to be a market maker buy model in that higher time frame retracement, targeting the high, maybe this fair value gap up here, the midpoint. If that's going to take place, I don't want a deep retracement. A deep retracement makes me uninterested in that type of scenario. It should be a fast move. If this is going to continue in the DXY and we are going to see this run higher, we have S&P between the three indices at the lows, which has, in this case, led to this retracement. We've been super aggressive to the downside. It's reasonable to anticipate a run above buy side here because it's failed to attack the previous day's low. But if we're going to support that idea and try to paint a narrative around it and trust it, we're going to have to see this as a very shallow retracement area. And then, of course, try to find our model operating within, some of this price delivery. It may happen or it may not. Again, we're right back to equilibrium for this morning range. We're a little bit above equilibrium when it comes to this high extreme down to here, to this low, which is the parent time frame and the parent range. So, price came down below that equilibrium and now has delivered off the S&T at the lows. Here, let me place that so you guys don't forget it's there. So yeah, again, the behavior I'd have to see here if I'm going to trust buys, I would love to see DXY continue to tank off the face of the earth. And then, of course, this new day opening gap, I don't want to see it break through this. It shouldn't be a deep retracement if I'm going to favor buys. If it is a deep retracement, I'm uninterested. Because if I'm going to trust this as a market maker buy model, I know for a fact, if it's a market maker buy model, the second stage or the later stage that delivers price through the initial objective, which in this case would be the high up here as an original consolidation. If that's going to take place, it generally, if it's a good opportunity, it's not going to retrace very deeply. It's going to barely retrace, and it's going to quickly move. The deeper the retracement in a second stage distribution area, which that's what this would be, if this is in fact going to deliver above here, generally has a shallow retracement. And that's why the second stage distribution, maybe some of you guys have heard this, but the second stage distribution is the one model ICT said he would choose over every model if he had to pick one. He said it's the closest thing to the actual way that he does things. Out of all the models he teaches, it's his favorite. And he likes to do turtle soup entries. He likes to, that's one of his three that he likes. ICT likes to also use something called the internal range expansion, where price sweeps out internal range liquidity first in a price leg, then breaks above, like say a high, and then creates an order block or a fair value gap, similar to the YouTube model. It's funny because you go back into ICT's 2016 stuff, and he gave that out, and most people didn't put the puzzle pieces together. I know I didn't. I was the same one, same as everybody else. Well, that's because I was so new. I didn't understand the elements to creating a trading model. I just didn't know. So yeah. Some interesting things, right? So yeah, we'll see what the response is going to be here. I'm not interested in anything right now. I hope you guys are being very mellow, not rushing things. I appreciate you guys that have been here for so long. It's amazing. I'm very grateful. So we'll probably be live for maybe 20 more minutes. I think that a lot of stuff is delivered. We can clearly see that price is in a range-bound environment, right? There's a possibility for price to do what I just mentioned. I don't like the fact that it did this deeper retracement. It should have been able to just stay above this if it was going to do something that I would be interested in to get above the high up here. It may still go up there. But I'm very demanding when it's CPI, when it's FOMC, NFP. You have to be. If you're not, you're playing games. So we'll see what happens right here. So we ran this low out. We got this regular trading hours gap, we got the new day opening gap, and we have the first fair value gap after the first fair value gap after the open. So if we can get a displacement above this high after price does a run on stops here, and the objective does end up being, say, the midpoint up here, and DXY continues to fall, that is something I'd be interested in, possibly finding a fair value gap around, and then maybe riding it above something up here. Because again, remember, price delivered here, maybe the YouTube model formed in here, but say you missed it. This is what you'd like to see. Although I wouldn't wanted to have seen this drop so much, I like how quick this is responding back to the buy side here. You look at this, there's a swing high, there's a run on stops at a PD array, and there's a swing high, right? If it violates that and gets above these supportive levels here, after it has the S&P at the lows as well in the higher time frame down here, if we can couple that with DXY declining at the same time, there's a YouTube model in there, right? With a bunch of supporting factors, possibly amplifying the likelihood that this is, probably going to blow these people out up here. Still a possibility because of how we see price delivering. We're still in a less favorable environment. So it could fail and just revert right back to the midpoint of the range like we've been. It's done it a bunch of times this morning. We also have this here, actually. So this is a very interesting level. I'll keep my eyes on that too. So we got the first fair value gap. We have the new day opening gap. We now have a possible inversion or reclaimed fair value gap. DXY is very jumpy as well. Ideally, again, if we were in a day that was trending and we wanted to see a way to get involved if we miss something down here, again, the way you observe continuations is once price delivers, you go right into whatever price is doing, and if it's like in this case, if it's going to retrace to go higher, you want to reset the rules and start to think, okay, I need to run on stops if I'm trading the YouTube model, for example. I would need this to retrace, run out some type of short-term swing low. Then I'd have to see it displace, give us a shift in market structure. I'd have to have a very easy target to observe. Obviously, if it hasn't been met, then it's still on the table. And if everything else stays intact, I would just find a fair value gap in that and then try to engage something like that, even if I miss something down here. And then I would continue that process all the way up until a reasonable level's met. And it's the same thing when you go down, right? Say this low is violated and then price ends up trying to attack the previous day's low again. I would just, if I was going to favor shorts and try to identify something, maybe an opportunity shows up here and I miss it. Okay, well, I just have to wait for the rules to kick back in place as price goes towards the particular objective I'm trying to identify, right? So say price presents an opportunity in here to go lower. I'd have to see price do something like this, right? I'd have to see, okay, retracement. I'd have to see a run on stops again, and then I'd have to see it present a shift in market structure back in the direction. Say previous day's low is my objective. If it hasn't reached it and it has a reasonable range from where price is at to the objective, and I want to get back in line with the market that's already moved, this is what I would be observing, right? And then each time price delivers like this, if it can offer this pattern again, assuming that we're trading the YouTube model, that would be a possible entry. The further away, if you're shorting, the further away that it gets from a premium, the closer it gets to the objective, the lower you should lower your risk. Because you're further and further, the target gets smaller and smaller, and just the likelihood for price to pull against you increases the further it gets from the initial entry that set up the move for whatever target you're aiming at. But as price delivers, you continuously see an entry, you identify your model. If you missed it, okay, reset. Look for the opportunity again. And you got to make sure it's in line with the higher time frame view. That's why we spend so much time there. Right? So yeah, I hope that makes sense. And notice how it didn't offer that. So guess what? There's no opportunity. Right? It rejected away. So now I'm back to resetting. Okay? I'm back to resetting, gaining intel, and observing how price is going to continue to deliver here. We're pretty far in the AM session. We already, of course, found opportunities early on. But yeah, even if you missed all the different opportunities, this is how you would go in and approach if you're looking for a move. If you took no entries at all, right, you'd go back in and think, okay, where is my rules? Right? Are they kicking in line again? See, let's see what happens here. Right, so this move failed, right? It didn't break above the high, but let's see if this one can actually get up above that and then present us with that same perspective. Coupled with the new day opening gap, coupled with an inversion fair value gap, coupled with the first fair value gap. Let's see if we can get above all three of those levels and then maybe use that as a potential launching pad to possibly get us up above this AM session high up here. And then maybe, just maybe, it can be excited enough to get us to this 4-hour fair value gap midpoint. And then basically end this day as a retracement. So yeah, let's watch what happens here. Right, this should, if it's going to get up here, this is where it's going to deliver from, if it is going to deliver. So we got a run on stops here. We got this one too. It just came back down. It kept it intact. Now we got a shift in market structure after sell side's taken. As price is looking like it's on its way to potential buy side. Failed to break the lows. SMT on the daily chart, which is why I'm assuming that this has even a possibility at all to retrace. We've been very, very bearish. So it's not unreasonable for us to assume that price may look, in this case, to attack the buy side up here. And again, since we're in an overall downtrend, as always, in a counter trend environment, we cut our risk. So if you take a loss, if it does turn around and end up going back in that direction with the higher time frame, you don't get hurt, But if you're correct, which I assume there's a pretty strong likelihood that we're going to probably blow these out given what we see here. We're back above all these levels too, so there's an argument for that. But yeah, if it does get up here again, this is where it's going to deliver from. Stop in this case, right? We'd look at these down candles here and this run up. We'd look at that as a balanced price range. Breaking through, like this first fair value gap, this inversion, and then the new day opening gap here. If it was to break through that, I wouldn't want to see that. I don't want to see it come down into there. And if we just get stuck inside this and it doesn't deliver and it just holds itself in there, you know, you'd probably want to make some considerations as far as collapsing the trade if it waits too long. It shouldn't wait too long. There is a macro coming, so maybe it holds as a result of, you know, the anticipation for the macro. You see the 5-minute order block here we were talking about? That order block has now been disrespected. So that's another reason why you know, we may have a likelihood for price to get up into this high up here, sweep out all these people. But yeah, it's been a very, very sloppy, you know, one direction, let's move the other direction, then come all the way back to equilibrium type of day. So as we move up in time frame, considering what we just talked about, the little idea that we just observed, right? Could start to look at what the other time frames are doing as well. And again, if it's to violate these levels here, that should be acting as a supportive idea to push price higher, then, you know, we keep our risk close to our vest, you know. There's no need to force things. Clearly, there's not going to be a huge range. I mean, it does seem reasonable, especially if DXY is going to be bearish. It does seem reasonable for this high to at least get attempted and then offer possible minimums. Again, we are outside of the macro. So anytime you enter outside of a macro, it does run the risk of price refusing to deliver. So that's yet another layer to our reasoning as far as why risk is cut aside from the counter trend view. So yeah, these are all things that you got to consider. You got to spend a lot of time cultivating your risk protocols and studying conditions, and when you're in conditions that seem more difficult, you need to be more aggressive with your risk, and this is a time that promotes that idea. Right, so let's study how this area delivers price. Is it going to offer, like I mentioned, is this going to be the area where the move gets us up above this high? Is it going to stall out and wait for the macro, right? If it breaks down below these levels here that are supposed to hold price, if it is going to be supportive and getting above the highs up here, if these are violated, does that end up leading us to triggering the move to the previous day's low, right? This is AM sessions high. So let's see if there's some juice that's going to have. You know, we're at a moment where, you know, price may hold off till the PM session. We've had a lot of delivery, so that's another consideration. So yeah, let's watch what it does here as a result of these particular levels. Again, it shouldn't be able to even break through the midpoint of this if it's going to be exciting, especially considering the market maker buy model possibility I was talking about. Hanging around too long in that area also completely disintegrates the likelihood of a quick, fast, sudden, expected move that the second stage distribution generally provides us. We're kind of seeing the result of that. How long it's waited inside that assumed second stage distribution, if that is in fact going to, you know, deliver and get us up above the high up here. So yeah. So you can imagine, right? Traders' mindsets in here. Say they haven't taken a trade, or say they took a trade and took a loss, or, you know, maybe they're trying to get involved and they're in a rush. You know, you can imagine that someone that comes into the market disregarding the likelihood of this type of scenario taking place, this scenario being, you know, back and forth, not really interested in directed one-sided delivery. You can imagine them being in here and being overly excited, seeing something like this, immediately pushing the button, or seeing something like this, and immediately pushing the button. Excuse me. And then they blow their account. You know, we want to not have to deal with that, right? Part of that's going to also come from your ability. Excuse me. Part of that's going to also come from the ability of you, like, being able to take something like we took earlier. Like we took this buy. We talked about something in here. We talked about the minimum in here. All of those played out and offered possible entries. If you're able to take that and then come in and study, right? Or take that and get off the chart if you can't just sit and study, because maybe you'll take a trade. If you can build the skill set where you can accept that and go to the sideline, you afford yourself the ability to do what we're doing here. We're watching the behavior around these different areas, watching prices behavior, right? Notice how it's stuck inside this area where there's all these overlapping PD arrays I've mentioned. Notice that this area is also, if you go from the high I mentioned earlier to the low, notice how it is right at the equilibrium point. It is stuck, showing you what equilibrium does when you're able to map out the current range properly. Equilibrium holds price, right? It holds it dramatically in many cases. And look at now, we're getting closer to the macro, and now it looks like it, may have an interest here to start delivering. So yeah, I said that this area, if it's going to deliver, it's going to deliver up there, right? An entry in here obviously would have been a lot harder to hold on to, right? Because it's just stalling out, and of course DXY looks like trash. But yeah, this right here makes me pretty convinced that there's a pretty strong likelihood that we're going to break above the high up here. We're going into the last macro of the AM session. This is the lunch macro. We got a fair value gap in here. So yeah, let's see how this behaves. See this right here. This right here will be the last potential observation in terms of possible entry. We did say that if it's going to move from this area to the highs, this is where it's going to do it at. It should not blow out the low. I said I wanted to make sure that I would have preferred to see it not break this stuff at all, right? But given the fact that it came through it, that's basically a wick, right? It reacted quickly and then came back above it. So we'll see right now, given the weakness in the DXY also going into this macro. If this is going to deliver, it should be a quick move from this area here up to the highs. If we see something like this take place, it would not be something worth holding on to going into the lunch hour. You would just collapse the trade if that was the case. So yeah, let's see what happens here. Let's see what's that. It's got another 90 points to get above those highs. It's pretty interesting. See if it can give us somewhat of a move away from that. Let's see. See what happens. So let's see what the behavior is going to be from here. I mean, of course, assuming that, you know, maybe if you would have tried to engage something inside this, 30 was offered there. Super high risk given how close we are to the macro. Price delivering down into here. I would prefer to see it deliver in here, sweep this out, and then respond away. Maybe do something like this. Or maybe take out this low here. Give a nice strong candle outside of this fair value gap. Maybe come back in, tap it one more time, then launch to get up above the high up here. That's something I would prefer to see in this scenario. If I was looking to, you know, figure out some type of engagement. Of course, this is my view. You know, this is what I personally, if I see, you know, this take place, this is what I could, you know, reasonably consider taking an entry on. But given the fact that I've already engaged today, it's not, there's nothing that I'm going to participate in. Because it is what it is. I posted something on my Instagram the other day. It was a pretty solid visual. I forgot what the guy's name was, but he showed like a visual of two traders. You know, they both ended up taking a trade, making like, you know, 5-10 grand. One of them got up and walked away from the chart being satisfied, while the other guy tried to get more, took a loss, and then ended up down $2,500. If you bring that to a smaller view, smaller conclusion, smaller perspective, you know, you may be able to make $20, $50 if you have a tiny account. And you could walk away with that. And, you know, if you have a small account, that's a good amount. You know, if you have like 5,000 or something, that's a decent amount. That's like 1%, you know, or you know, something close to that, or at least like something is reasonable if you have 5,000 to make $50 a trade. Or you could sit there and try to demand more and not be able to get those little base hits, and then end up being reckless and end up down $100. You know, when you could have just got up and walked away. $50 multiplied multiple times over the year. If you do the math and think about compound interest, and you focus on the numbers and trading well, it doesn't matter how much you have. You know, what truly matters is your ability to be consistent. And the process I share here, that is the main objective, is to get you to see the consistency and how it's possible. Bias. Right now, the bias, there's no hard line bias. I did kind of paint what I would have liked to see. Overall, though, we're in an indecisive environment. We talked about bias all through the morning today. We did call out multiple opportunities. I mentioned that I'm not really interested in taking anything given how back and forth price is. If price would have done something like this, this is too deep of a run for me to be interested in trying to target price going higher. We may stay down here. We're back to equilibrium again. You know, it's refusing to get away from that. We're approaching the macro, so maybe things change after we hit this macro. Maybe it gets right back above this fair value gap. And if that's the case, then obviously there's a reasonable assumption that may trigger price to get up above the high up here, especially if DXY declines. All right, DXY is definitely in a bearish move. We got the indices having an indecision candle, as you can see, as we painted from that smaller time frame. If price, like I mentioned, does get back above, this is pretty interesting. We're still respecting those levels I mentioned should stay intact if it is going to continue to be bullish. If we can get a strong impulse out of that, and then maybe come back, offer something in there, maybe that can be a reasonable assumption for price to get up into the highs up here. We're approaching the lunch hour. Normally the lunch hour is a no trade day or a non-trade or non-trade hour, I should say, if you're following the YouTube model rules. This last macro is the lunchtime macro. Things were favoring downside for the most part today. But then obviously we've turned around and have started attacking buy side. The lunch macro we're approaching here may be the catalyst that runs us up above the highs. And then, whatever happens up there, obviously, that hits the full objective. If we're bullish, this high and the midpoint of this fair value gap is the farthest I'd like to see. But if these areas get violated down here, given the fact that we're in an indecision style day today, it's back and forth. If we get down below there, obviously the cards are still in play for previous day's low to be potentially attacked. Yeah, so given all that we've talked about today, we've talked about so much in the last, 3 hours and 20 minutes. It's pretty insane. We talked about multiple entries. We talked about this one up here, framing the London's high to get tackled. Once that was taken, I said, let's watch what takes place. We talked all through this. Talked about how this will probably attempt to get down below previous day's low. Clearly that failed. We have the higher time frame S&T that ended up pushing price higher. We talked about this fair value gap and how if you were focused on minimums, 20 to 30 points, this was a beautiful delivery offering that before it turned around. But if you want to hold this and be greedy and not accept the minimums on a day or week like CPI week or CPI day or NFP week or NFP days leading up to those news events, a lot of times you can get stopped out because these environments afford you, or they give you higher risk for price to be choppy like this. Imagine anybody that's in the market trying to catch huge range moves because they've seen price sell and do all these things over the last couple of weeks. They've been unable to hold on to anything meaningful unless they're a scalper. It's a heavy scalpers environment right now. Given the fact that that's the case, of course we've talked about all the possibilities. We talked about so many different things today. We talked about this 5-minute order block, how that led to this delivery, that as well. So there's been 4, 5-ish opportunities today. We talked about, we just mentioned this one up in here. I said if we stay above these areas here, it has a pretty strong likelihood that we could blow out the highs here. If it gets more excited throughout the rest of maybe this session, New York lunch into PM session, if we get excited and DXY can continue to fall, the max I see price going up into is the midpoint of this fair value gap. I could be wrong, right? It could blow through the entire thing. The initial idea was to aim for the previous day's low. That worked out until the SMT showed up. And then, of course, we quickly adjusted to that, assuming that, if price stays above this, then there's a likelihood for us to leave that low still intact. So we'll continue with that assumption. I'm going to be off the chart, obviously, for lunch and PM. But yeah, I hope you guys have had an eventful morning, as always. I hope you guys got value from today. Moving into the session, if you are going to hang around and continue to watch price, let's watch how this behaves. Keep the new day opening gap, the first New York session fair value gap, and this inversion fair value gap in mind. If we could stay above that, plus the regular trading hours gap, and if we could stay above this open price here and continue to march higher, maybe target the high up here, then that would be decent assumption. But again, we're now back inside equilibrium inside this range. It's been a very back and forth seek and destroy style day. So it's hopefully encouraging to see how we've operated today and how there's been multiple opportunities even in a time where price was not one-sided. We had an assumption that we kept in mind. We were married to the higher time frame, which assisted us in continuing to push price lower. But then again, our flexibility and understanding of today's condition and what price was offering to us allowed us to also quickly adjust, and then obviously paint out the possibility for the contingency plan, which has always been this AM session high, and then of course the rest of this 4-hour fair value gap, right? Then of course the market maker buy model opportunity I was talking about. If this delivers up to the high, we still have that framework intact, as you can see. It has not violated these areas. It's hung around too long, so that it disregards my interest in trying to engage this as a viable market maker buy model in this smaller time frame. That, of course, is all working in the possibility of this larger possible perspective if it does end up being a strong retracement from this daily fair value gap, which we talked about earlier too. So yeah, and then if price was a break outside of this 4-hour fair value gap, get deeper up into here, my eyes would directly go up into these areas. Obviously that's a little far off, so again, that's just a bigger picture view off of the things we were looking at from that lower time frame, so it makes a little bit more sense, so the whole picture is understood. All right, but as far as the lower time frame is concerned, if it can still stay above these levels I've mentioned, regular trading hours gap, new day opening gap, first fair value gap of the day, this inversion, and we could stay above this 9 p.m. Daily open. Again, we have a target up here at max, right? That's like the maximum or minimum if it does want to run up there. I mean, it could just run these highs and collapse, right? But given the fact that it's so consolidated, if it does reach for the buy side, look for this high and then the midpoint of the 4-hour fair value gap. If it blows past that, I start to make assumptions that this may be the weekly low and that we may start to see a strong retracement depending on what CPI chooses to do, because that can trigger in a strong possible retracement. Because remember, if we're looking for the daily time frame to deliver from a particular level or to a particular level, or we want to see the daily chart do a particular thing, generally the higher time or the economic calendar is going to have to be involved in that. You know, the economic calendar is going to need to push that. So in that case, the economic calendar becomes somewhat of a macro timing tool for that higher time frame delivery. So again, that's why we're gonna have to gauge what tomorrow does. But yeah, so again, I hope all the things we've talked about today have made sense and provide you value and clarity in some aspects. I hope some questions were answered. Again, if you guys have any questions, if certain things don't make sense, you need more amplification, just let me know. I've gotten a couple questions about premium and discount, and a couple other topics, so I'll be making videos related to that. But yeah, with that being said, thanks again, you guys, for your time. I appreciate it. And yeah, if you need anything, just let me know. But in that case, let's put a ribbon on it, and I will see you guys next time on Sunday this coming week. And then, of course, we'll be right back to the grind on Tuesday next week for live trading. So yeah, God bless you guys, and I'll catch you all.